running.
Hello, everybody. Welcome to our Successful Trader Holiday Party for 2020. This is our fourth annual holiday party, and I'm always excited. It's my favorite webinar of the year. I come on, I get to talk to some of our successful traders, and it's always a good time. They share, what their challenges were during the year, what they learned, and they also give some advice to new and struggling traders, or even other successful traders, that will help them along their journey to becoming a successful trader. Today we have traders that are going to share some information with you, some very valuable information. We have 4 that are going to be live, and we have 6 that are recorded. Of course, you can pop in and out as you would like. And as we go along this, you can surely you can put something into the chat, but we do have to keep things moving because we have a hard deadline of around 4 o'clock here, and we want to make sure that everybody gets a chance to talk. Okay, so first on, let's see who we have here, and let me see if Susan is ready. Are you ready, Susan?
I am.
Awesome, awesome. So why don't well, first of all, I hope you had a great year.
Had a fabulous year. Thank you. I hope you did too.
I did. This is probably my best trading year, and despite the personal stuff going on with COVID and all that stuff, it still ended up being a really great year. So no complaints here.
Well, it did for me too. You know what? This was my best trading year too, and I think a lot of it had to do with the increased volatility, but part of it was luck. I started off the year really well, and then we went on a holiday that started mid-February, so I didn't have any large trades on. And when we came back mid-March, the COVID crash was right in the full swing. So I didn't have any trades that I had to fight with, and I just jumped in and traded directionally. And then the rest of the year carried on really well.
That's fantastic. That's awesome. Now, did you have stuff that you were going to show us, or did you want to?
Well, I do. I've got a quick little trade, but I just wanted to mention that one of the things that happened was that after the market crashed in March, I had traded directionally, and I didn't do so well with trading off the bottom of the market. But it was around, I think you did a trading with the pros session in late spring, where you looked at different guidelines for doing your M3 with the increased volatility and perhaps adjusting with calendars on the top. And so I had a lot of success with trading M3s, for the next few months.
It was. Once we got past that initial drop, it was just a fantastic year.
It really was. And I found that I really liked the idea of adjusting, as I got to a certain point, adjusting with calendars at the top, and I got really familiar with them and comfortable with them. So I sort of incorporated them into a lot of my different trades. But one of the things that I think my greatest success, if you want to call it a success this year, was I started a bearish butterfly on October the 23rd. I hadn't done bearish butterflies all year, thank goodness, but this one was kind of unique. And if you've got 5 minutes, I'd love to show it to you.
Yeah, that would be awesome. Why don't we do that, and then we'll go on with a couple more questions with you.
Okay, great. I'm just going to share my screen, and hopefully you can see this. Is that can you see it now?
Yes, I can.
Okay, so it wasn't my best trade. I mean, it was not my most profitable trade, and it was a real mess. It was like a dog's breakfast at some points, but it never got out of control. And
nice.
I can remember in the past when I was trading M3s, and just with the standard 10 contract position, I'd be using 50,000 in capital easily.
Right.
This one never got over much over 30,000 at the very, very most. But anyways, I'll just sort of explain my thought process. So, I was convinced that in October, the market had been gone up. It was horribly overextended, and we were up around the 1650 mark. It pulled back, and then it was just sort of heading back up, and I thought, well, it could be a double top. So what I did was I threw it on some 1610 butterflies at 15 days to expiration. And then of course, the market dropped right away, but it dropped too soon. So it wasn't time for the butterfly to make any profit. Are you still there, John?
I am.
Oh, okay.
I had to move my screens around. I'm looking all over the place. So I'm just trying to be considerate to everybody.
Okay, sorry.
My video is back.
Do you want me to move mine? Is it?
No. It's perfect. Yeah.
Okay, I'll just put it there. So anyway, so when the market moved down, I added more butterflies on the bottom. I didn't roll it back down, but I added flies as if it was like a rock going, a reverse rock.
Okay.
In a way. And then as it moved back up, I thought, okay, this is a strong move up. So I decided to convert it into broken wing butterfly. And I'll just, I'll see if oh, here's my next. Yep. So what I did was I had a bunch of flies down below. As it started moving up, I converted it into a broken wing butterfly so that I could control my risk on the upside. And I just did that by putting in some call verticals. And then once it broke through this recent high, then I continued to roll the flies and I added more and more call verticals. And then once it got through the all-time high way back at 1742, I thought, okay, this market's really being stupid, so I have to do something different. And I converted it to an M3, but I kept some of the flies on below.
Okay.
So I think, so that was sort of what it looked like at this point. We're rolling flies. I've still got flies down below. And then this shows that it wasn't a pretty picture at all, but I had a call up above. I still had flies down below, and that was more as a hedge just to keep my T+0 line fairly flat.
Right. So you kind of start out with like a bearish butterfly and you convert it over to more or less an M3.
I did.
Yeah.
And then once the market, it had a couple of really big days. And so I started to adjust with calendars on the top. And I threw on 6 1810s. And so that was, rather than throwing on another butterfly in the top or continuing to roll the flies, I used calendars because I was going through commission like crazy. I was rolling and rolling and it just wasn't stopping. So at this point, like, it's kind of ugly because you've got flies below, a big set of flies in the middle, you've got calendars, and I still had on my long call.
Right. You still only have less than 20,000 in the trade, which is pretty cool.
Exactly. And I never felt out of control. So this is the point where it was drawn down the most, like it was over 2,000. But I was really calm, and this was a year when I felt confidence building and I didn't panic with anything. And so once it got pat, there were 2 really big days in here. I think November 23rd and 24th. And that's when I just converted it entirely to calendars.
Okay.
And because of the experience that I'd had, sorry, this is still with the flies in the bottom.
Sure.
Yeah, that's it. Anyways, we'll go past that one.
But that's a lot of range. I mean, you take that in a normal market movement and you've been doing really well.
It was surprising how well it did. And then I ended up just in a calendar position. At one point I had triple calendars. But because of my experience with using them to adjust M3s earlier in the year, I had a lot of confidence in them. So it felt good. So once I, rolled, the market kept going up and up and up, and I rolled calendars and then finally closed it out for a profit. I think it was about 4,900.
It finally stalled just enough.
I'm on the top of this basketball, and as you've said, when it gets up there, take it and run. I pretty much hit my profit target, and the gamma starts to get pretty big. So you have to, once you know the nuances of a trade, you get out when you should. So this trade went from a low of 1526 up to a high of 1936. It had a 420 or 410 point range. So, I mean, as I said, it isn't a pretty trade, and I had the disadvantage of sitting in front of my computer all day, every day. So,
Right.
you know, I tend to like to make things happen, and that's, you know, one of my problems is that I do tend to meddle, but I didn't over meddle in this one, if I can say that. Um, but I
Right.
just watched what the market was doing and decided what I thought would work going forward. So they, you know, the maximum risk was 30,800. The maximum drawdown did get to 2664, and I was in the trade for 48 days, but it made, you know, 16.1% on capital used.
Right. And that kind of goes to show you what you can do when you build these kind of skills. You know, you entered, you were wrong with your market opinion.
Oh,
The
oh,
mar
totally wrong.
right? The market was going crazy to the upside, some to the irrational it's never done before, and you were able to intelligently gauge your risk and make some really beneficial decisions that brought the trade back.
Well, you talked a little bit in one of your recent Trading with the Pro sessions about intuitiveness. And I think it takes years. It takes
Mm,
time to sort of get to know the trades, and I've studied your programs. I mean, I've got them all, and I've studied them like crazy. I've traded them following the guidelines. But this last year, I didn't have OptionView or One. I was just trading using Thinkorswim, and it was more of a feeling that I knew what I needed to do. You
that's
know,
awesome. That's another point too. You know, when we start trading, we're highly dependent on our analytical software.
well,
But
we are, yeah.
but as you get experience, it becomes less and less relevant.
No, it does. I mean, I missed having software because I do like to do some back trading, and I will get back into it again.
Mhm.
But it was a good year for building confidence, and I think the increased volatility certainly helped. Um, so I'm happy.
That's awesome. That's awesome. So, what was your biggest lesson you think for the year?
My biggest lesson, um, don't overstress your trades. Um, I think, I don't know how to say this, but just don't go in too big when
Right.
when you're not sure of what the market is going to throw your way. Um, and if I had to say, you know, something that I don't do very well, which is don't meddle. Don't meddle with your trades, and follow the guidelines as closely as you can. Um, Over time, you know, you'll get a feeling for the nuance of the trade.
Hmm. Yeah,
But I
nice.
think
That's
it's just,
fantastic. Yeah. So, lessons going into the new year. What to improve your trading?
you know what, I'm going to continue just doing what I'm doing. Like it really was a good year. Um, I'm just going to do more technical analysis, and I'm
Right.
going to probably try some of the other trades within your program that I haven't done yet. I haven't done any of the X4 trades, and I'm quite anxious to try some of those. So I think they would be good.
Just more tools in the toolbox,
More
as they
tool. There's
say.
so many tools, John. I have to tell you, there's so much that I can barely keep up.
That's all right. But as long as you're making progress, that's what counts, right?
I am.
All right. Awesome. So,
And I
advice that you would go back and give that you would give a struggling trader.
Well, I think the main thing would be get to know the strategies really, really well. Follow the guidelines, so that you don't have to worry about them. And then after you've learned the guidelines really, really well, that's when the nuances, you start to get a feeling for the trade, and then you build your repertoire. But I think right off the bat, and don't meddle. Follow the guidelines.
Yeah, I think so many people they try to run before they know how to walk, right?
Yes.
They jump right in and they want to do the most advanced things and use technical analysis, and they don't even really understand the strategies yet. So I think that's a very important first step.
I agree very much. I mean, I was in your the very first live session that I went to was your M21 session in New York City. And at that point, we were doing M3s and bearish butterflies and rocks. And I still haven't traded a rock trade. And it's not that, you don't have to.
No,
And I
you don't
think,
have to. Right. You can make plenty of money without the rock trade.
and there are other things that you can do instead. And I mean, I'm anxious to try it too, but it takes time. It doesn't just happen. I mean, that seminar was back in 2014. So that was February of 2014. That was almost 7 years ago.
Yeah.
So, I've been slowly building my confidence in the trades, and it feels good.
That's awesome. Well, that's great to hear. Well, thank you, Susan, for coming on and sharing your experience and knowledge with us. I greatly appreciate it.
Well, thank you, and I hope you're having a wonderful holiday season, and I hope everyone is.
Thank you. You too. Bye, Susan.
Bye. Happy holidays, everyone.
Happy holidays, everybody. All right, let's see what we have going on here. See if we can find. Oh, David's here.
There he is.
There he is. Hey, David, how are you?
Great. Good afternoon. How are you all?
Awesome. Happy holidays.
Happy holidays. Merry Christmas. Happy New Year. All that good stuff.
Definitely. So, how are you this year? How are things going for you?
Everything is good. As everyone with the pandemic, things are a little bit different this year. So my life has changed a little bit. For those that don't know, I'm a pilot, and like most industries, we're overstaffed. And earlier in the summer, Southwest came out and said, hey guys, we're overstaffed. We really don't want to have to furlough. And instead of that, we'd like to offer a package where you can stay home for a certain amount of time and get paid a portion of your income. So yeah, I know it was a negative that led to it, but it was a means to an end, right? So I'm able, since September 1st, and even a little bit before that, I've been home enjoying family time, enjoying quarantine as best we can, and taking a little bit of extra time on my trading. So it's kind of like, I think I've heard you say in the past, John, it's whatever happens, things happen for a reason, and you have to look at the positives and not the negatives. And that's not always easy to do. So it's kind of a mindset thing.
Yeah, especially with COVID, and then the market starts crashing, and then, you threatened with losing your job because nobody's flying and all that stuff. I can see how that could definitely create some turmoil. Plus, you have some real estate involved in that business too, which probably didn't help either.
Yeah. So I've got some real estate myself, but I know all the tenants in there, and they're all great people. And so that's going well. But I also have my hand in a little bit of commercial real estate, which did not do well this year. But that's kind of the point of diversification. Some things gain and some things don't, and it hopefully balances each other out. And while I've got the mic here, John, I like to say that I think if I had a mustache, you and I could be twins.
We could be. We look just like that. Would be. That's right.
I think you've got your shirt on as well, right?
Yeah, I do. And your hair just needs to get a little grayer.
There you go.
And we'd be okay.
Very good. Yes. I'm getting in the full holiday spirit. That's the big difference between like this year and last year. So last year was so much different coming into joining you. I had worked like 4 days straight and got done at like 1 a.m. in Chicago, got about a half night's sleep, and drove home really quick, got in the door, got into my office and settled down for about 10 minutes. And then boom, I was on with you. And so it couldn't be it couldn't be more opposite this year, because I've just been kind of hanging out and
chilling out, having a good time.
It's really been nice.
That's awesome. And it's great too to have multiple streams of income. I always encourage people to do that. If you have a job, you have some real estate, you have different types of real estate, you got trading, you got all this stuff going on, and it's like a table, right? If you have one source of income and one leg goes away, you're done. But if you have 5 or 6 legs on that table, you can lose one. It's not a big deal.
I agree, and I know we're kind of talking options here, but it's especially this time of year when it's end of year, you start to look forward to the next year and your goals and everything. And I start to think about my whole portfolio, and then you get into this whole deal where you want to decide, like you think about, oh, well, I want all this money, I want to be rich. Well, people need to know that there's a difference between rich and wealthy. So
Oh,
rich,
yeah, absolutely.
yeah, I mean, there's a lot of people that are rich that have, say, like a high income, but unless you balance that out with low expenses, then you're not wealthy, right? So
Right.
wealthy is the ability to hold on to your money, and you can be rich and not be wealthy, and you can be wealthy and not necessarily be rich if you're saving and doing everything. Um,
Well, yeah,
correct.
we've seen what football players or sports players and musicians that make millions of dollars in a year and they're
Yes,
bankrupt, right? They have nothing.
absolutely.
Yeah, it's crazy, but that's a great point. That's great advice. So lessons. What's the biggest lessons you've learned this year?
Oh man. Well, I've got a funny story about that. So um, earlier this year, I remember it exactly. It was Monday, February 24th, I believe. I went to training, and once a year I go to travel to Dallas for simulator and classroom training. It's about 4 or 5 days, depending on the setup. And so um, I went there with about 3 trades on, and
Okay. Well, let's see.
and
I'm doing the dates. Yeah. Okay.
yeah. So that date is burned into my mind because that was the start of it. Okay, so
Right.
that Monday, the market just started going down, and I was traveling to Dallas, and I'm thinking, okay, no big deal. I've got there's Central Time, I'm Eastern, so in the morning we start at like 9 or 10, which is 10 or 11 Eastern. And I've got some time in the morning to look at my positions throughout the day. We've got a lunch break, stuff like that. I can take a look. I'm a good trader. I can make this work, right? Well, it didn't work out so well. So
Yeah.
it just went down and down and down and down. So the lesson that I learned is even as much as experience as you have, if you've got something important, whether it be with family, vacation, work, and you've got trades on, just get out of the trade or make it so you don't have to look at it. And so that would be put a straddle on it. But for me, it's not what I would do. If I'm going to put a straddle on something, I'm just going to take it off.
Right. I think that's important, right? Your family's what's most important, not the stupid trade you have on.
Right.
Yeah, for sure. And if
Yeah.
you lose
So
a trade, you lose a trade. So what? I mean, that's part of
I
it.
thought I thought I would be good at juggling. I've done this enough, but going forward, that's a lesson that I've learned. When I go into training, I've got to be focused on that and not be able to look at that. Be able to. It's nice to be able to say you can multitask, but I'm just going to put that on the side burner while I'm doing something
Well, it's not
else.
necessary. If you have something extremely important, you can have the trade on for sure, but then just get out of it if it gives you trouble, right? So
Exactly.
yeah, awesome. That's great. So successes that you achieved this year despite all the adversity.
Well, right. Definitely had a challenging year. First and foremost, we've stayed healthy. So myself, my wife, and kids, we've knock on some wood, and we do our best by wearing masks and doing
Mhm.
what we feel is appropriate. I know that's not always a popular idea, and hopefully we can see the light at the end of the tunnel. But by doing
Yeah.
so, we feel like we've kept ourselves safe and our relatives safe. We are very close geographically to my folks, Jill's parents, Jill's sisters, and her family, and we are unlike a lot of families in that we do really kind of like each other and like getting together. So prior to this, it wouldn't be more than a day or two, and somebody be in and out of our house or we're over there, and we just haven't been able to do that this year, John. And
Mm.
but we have in not doing that, we've stayed safe, and we're looking forward to get moving on and past this when we can.
For
So
sure.
so that has been a success that we've stayed healthy. And then on the trading front, it's really been a great second half of the year, right? so
Yeah.
so a couple of losers back in the late February and March timeframe. But man, after that, John, everything has been going extremely well.
Yeah, I think there's an important lesson there in sticking to it.
Yeah.
Right, because we had people who, or I've heard of people who kind of freaked out with the maybe losing 2 months during that crash, and then they
Right.
drop size or they stop trading, when really the second half of this year, the trading is just insanely good.
It has, and you wouldn't know that if all you did was took those 2 or 3 losses early in the year, and then you
Yeah.
just have a bad taste in your mouth and say, "Oh, well, trading options doesn't work." When I'm
Right.
here to tell you, it does. And in fact, even with that March timeframe and the losses incurred there, this has been my second best option trading year after 2015.
That's awesome. That's
Yeah.
awesome. Despite all the market movement and all that stuff, that's super. So
Yeah,
what do
and so
you? Go ahead.
I was just going to say, being home here, and right now, again, we knock on wood that our kids are all three in school, right, in person learning. They haven't rolled that back yet. So between say 9 a.m. and 2 p.m., I've got that time and where Jill and I can go out and grab something to eat or get some grocery shopping done. Or if I'm at home, I've got the computer on. I'm not sitting in front of it all day, but I can come in here and check on stuff and kind of work in the lab, so to speak. So I've been doing a lot of what a lot of us in your group have been doing, the shorter term,
Short-term traders. Yeah.
week to 2 week trades. And so you have to be on top of it a little bit more, but I'm not sitting in front of the computer, 6 hours a day, but I've been doing some week long, 2 week long M3s and rocks.
Yeah, and they've been doing fantastic from much of the second half to the half of the year for sure.
They have, and I really enjoyed your calendar course earlier. I think it was earlier this year, or maybe has it been a year? Has it been over a year?
Goodness, I don't think it's been over a year, but it's probably been like 8 months.
Yeah. So I think you were leading the charge, and that's no surprise on knowing that the calendars were coming into play, and they have been. So I've been doing some shorter term calendar type trades. Earlier this year, I saw a promotional video, a sales video on a calendar type trade, and I didn't buy the course, so I don't know the specifics of it. But just watching the promotional video, and anyone who has experience watching the T+0 line can kind of like what I did with your M3 before I got on with you and bought all your courses. I kind of tried to reverse engineer it. So I've been playing with this calendar trade that's also short term, about a week or so, and I don't know what the rules are, but I've been making my own, and they've been working out real well. So awesome. The calendar trade is, I hate to say the flavor of the year, but the kind of has been working. So you can't rely on it and think that that's going to be the holy grail and it's going to work forever, but kind of ride the wave while it's working.
I think that's a big benefit to understanding different types of strategies and how options react to stuff like that, is that you understand when they're kind of turning in favor and when they're turning out of favor, and you can make your swaps and stuff like that and go do whatever you need to do.
Exactly.
So that's awesome. That's awesome. So one piece of advice that you would give a struggling trader?
Well, I'd say you have to understand and know in your heart if this is something that you're passionate about or you just want to get rich quick. So a lot of people are pulled into this arena with thoughts of windfall profits and stuff like that. It doesn't necessarily happen. We all can get some big winners, and here and there you get a tough loss. And so if you're a struggling trader, don't go after the trade. We know that. Go after your own mindset. Think about how your own relationship with money is. I've read that each person views money a little bit differently, and it's kind of like the whole NLP thing. Your perception is your reality, And I think that holds true with money too. And a lot of what we learn about money comes from our parents and being a little kid and how we saw our folks handle and talk about money. And I think it's Rich Dad, Poor Dad that talks about the poor dad said, well, I don't have any money because of you kids. And the rich dad says, I need to earn money and be wealthy because I have you kids. So it's two sides of the same coin, so to speak. And for a struggling trader, I'd say you got to get your mindset right. And I'm reading a great book right now called The Psychology of Money by Morgan Housel.
Good
And
book.
yeah. And he is an economist. He's worked for the Motley Fool for many years. I met him at a couple of events years ago, and now he's working with the Collaborative Fund, and it's like a startup type venture capitalist. And he is very knowledgeable on the psychology of money, and I would highly recommend that book.
Awesome. Awesome. So that's great. So it sounds like you had a good year overall.
Yes. Yeah, and I'm looking forward to 2021.
Looking forward to 2021. Well, thank you for coming on and sharing your insights with us, David. I greatly appreciate it. And
Absolutely.
it's awesome to see you and talk to you again.
Yes. Best wishes to everyone.
Yep. And best wishes to you. Happy New Year.
Thank you.
Bye-bye.
Bye.
All right. Let's see. We have Seth coming on. See if we can get him going. He's got to unmute himself here.
Hey, John.
Hey, Seth. How are you?
I'm doing great. I love the mustache. You want me to go on video here?
If you could, yeah, that'd be great.
Okay.
I'm sure people would love to see you.
Yeah. How you doing, guys?
Well, you got the office.
Yeah, I
Going
know.
on?
You've been here. We added a lot of stuff since then. We got a million pictures. A bunch of them, by the way, are from the event in Hawaii, and a couple different events of yours show up on my wall here. So they're fun. I'm trying to see if we have the one.
Hawaii was so fun.
Yeah, of me wearing that crazy shirt. No, oh yeah, I've got it here. I don't know if I can pull it down here without pulling the whole thing down, but I don't know if you remember, I won the contest for the goofiest shirt,
Right, yeah.
Hawaiian shirt, because we literally went shopping. We went shopping we were in Maui, right? Yeah, we went shopping in downtown Maui for literally the loudest shirt we could find. It was like we were on a mission, and we walked into this one shop, and Sarah said, "That's it, we found it. It was the shirt that won the contest." I'm looking at it now, and I also got on like a skipper's hat, and as soon as I walked in, Ray just started bowing to me because it was obvious I won just from the minute I walked in. Anyway, that was a really fun idea.
Yeah, that was a hoot, and it's it's funny when they know right away when you walk in, right? It's like,
the other thing was when we were zip lining, and Ray, the longest one was, I think, the last one in the course.
Right.
And Ray got on it, and he was literally panicking. And as he's coming through here, he said, "Get me off of this thing." But it was sorry. There's something about that I find very amusing. He's stuck in midair, let me out of this thing. So anyway, okay, I'm boring everybody with this stuff. If you weren't there, I don't mean to.
Well, that's it. Our trading events aren't just about trading, right? They're about having a good time.
I know. We're having a party too. So John, what's with the mustache? When did you grow this?
I just said, I just decided to leave it there, and it's only been there about a month or so. So
yeah, it's a good look on you. It's a good look. I like that.
Thanks. I had one when I was younger for years, but.
Oh, did you really? Oh, yeah. I never realized that. Yeah. Maybe it'll be like could be a winter thing.
Could be a winter thing. That's
right.
Are you down in
Orlando yet, or are you still up in?
We're heading down there Saturday.
All right. Awesome. That's great.
So, yeah,
I can be
heading
jealous.
down there.
Good.
So thanks for coming on, Seth. We appreciate you coming on. It's always fun.
Of course.
So let's talk about trading a little bit. What were some of the biggest lessons you learned this year?
Well, I would say two major lessons. One was a positive. One was a learning from a missed opportunity, I think. Right.
Right.
And I didn't get hurt too badly in the meltdown in March. Just a small loss from that, and that's because. And that's probably in a sense, the most important lesson that I can share with everybody else. I've been trading since 2000 and options since 2006. And 2008 was so shocking to me that it took me actually quite a while to get over it because it was so radical. It was so unbelievable what was happening in the market. I had never personally experienced anything like that. I did not trade through the dot-com bubble breakdown or going back even further to 1987. So I never had that kind of an experience. And when you have an experience that dramatic, where all of a sudden every day the market's shedding 5 to 10% of its value, you know, you're like shell shocked. And if you didn't really know what you were doing, like I didn't as an options income trader back in 2008, I was not realizing, hey, things have changed a little bit. This is not everything you were doing before is not necessarily going to work right now. And you got to recognize that. Well, this time I saw it. This time I was able to comprehend. In fact, I was up at the Money Show on March 8th, or maybe it was March 9th. It was a Monday.
That's right. You were doing a demonstration up there, right?
Yeah, I was, well, not, you know, I just did a speech. I did a speech. And so it was probably the last day a group event like that could have ever happened in New York City up until today, because that literally the whole thing was crashing that week. Everyone was realizing, oh my God, we're going to have to shut the whole country down. And it wasn't really obvious until that week. So I remember going in, I'm thinking, oh man, I'm going to have to be shaking hands today. Is this such a good idea? Things that would be unthinkable now, you were like, should I do this? Shouldn't I do it? So I realized, well, I don't want to be rude. So I would shake people's hands. The minute I shaked any hand, I run into the bathroom and, you know, I'd wash my hands and come back out. So I kind of knew I knew the seriousness of it, but not necessarily the magnitude of the seriousness of it at that point. So anyway, I don't know how I got off into that, but that was sort of when the crash was coming. But I was able to identify early that this was going to be this once in 10-year crash event.
Right.
And if you haven't been through it, you may not be able to identify it early. There were certain indications that this was not going to be like other temporary sell-offs, that this was going to be a massive drop. And so, so I just shut everything down very quickly. And, you know, I always say to people, options income trading is easy if you think about it, right? You win most of the time, right? Any strategy where you're not winning 9 or 10 times out of 12, there's something wrong with that strategy, right? If they're monthly strategies, right? So therefore, the whole game actually is controlling the losses. That's the whole game, in my opinion. That for the make or break issue for most traders in options income is controlling the size, which isn't exotic, right? It's not fun to say, but it turns out that it is probably the key to longevity in this game, right? So I basically shut things down early, and it did not, you know, become a problem for me, because when you've been through 2008, you get a sense of when another one of those is happening. So that was probably the most important lesson I learned of this year. Also, just very specific to the Rhino, which is what I'm trading now. And I'm trading the Rhino basically because I don't have time to, I have so much going on. You're aware of it. I'm so busy. I just have to have a strategy.
You don't even talk to me anymore.
Yeah, I know, exactly. That's right. I know. You're hurt. So the thing is, but the strategy is, so yeah, we used to talk for hours on Skype, you know. I can't do that anymore right now. You know, I want to get back there, but I'm not there right now. So I'm very, very busy. And so I have to have something that's extremely low maintenance. I can go by 3-4 weeks, literally, with nothing to do on my trades. And that happened even more this year because the trade, you know, the broken wing butterflies were being entered at a credit, right?
Credit, yeah, so you don't do anything.
So you don't have to, because well, you don't, in most cases, have to do anything. And so if it rallies, you just take your credit. It's not the most wonderful win in the world, but it's basically the minimum on these trades is a small win, right? You don't get to have that happen very often. So that's you know, that's why the trade was successful this year, for a very different reason than normal. we
Right.
had
Normally you
almost
can't do that, right?
we had almost no large wins, but we had one or two, but we had a lot of just little wins. And the losses, there was only one. It was right in March when
Yeah.
everything broke. That one, and that one was only like about 4%. It wasn't any kind of a thing you're going to get upset about.
Right.
You know, that, so because I've only been trading the Rhino, I've had good year, but it hasn't been necessarily spectacular like a lot of other people because I haven't really had the time to do trades where you have to manage them a little more. Dave was
Right.
just talking about 1 or 2 or 3 week trades.
Yeah.
So, but we won, you know, on 10
You
out
know,
of
you should have been in your 1 week SPX strategy that
Yeah.
that we developed at the
Yeah.
Trader Transformation.
Well, speaking of that, I'm just looking at your list now. We've talked about, you know, the successes in the year. I've talked
Yeah.
about the greatest lessons I've learned. If you want to go on to what I'm going to do next year to trade, you know, we took just, and we're going to be talking about this in March, but I've been working all year on, I've never worked this hard on a trade as I've worked this year. And it really started, you could argue it started, where was that? Boston, where we did that, where we did the workshop kind of thing where everyone got around on a table and we
Yeah, that was
developed a
actually
strategy.
in Orlando. We did it in Orlando.
That was in Orlando. Okay.
Right.
So it was actually that concept which led to and I'll tell you when it happened. I don't know how much time we have. It was March 9th, the same day I was talking about.
Yeah.
And I met with a guy named Scott Andrews, who's with Investacon. Investacon. You might have known about his website called Master the Gap. Anyway,
Okay.
so he's one of these high tech quant firms, basically, that develop lots of different things, but one of them is signals for the direction on the market in a single day. So everyone was so busy trading, making so much money, the day traders. You have any idea what the day traders at SMB made this year?
Oh, it's insane. Yeah.
I probably can't put the number out, but it is quadruple anything else they've ever done. I mean, it is so massive.
Well, you catch a day right now. It's insane.
We've got guys that are 29, 20, 30 years old making $10 million a year. It's insane what's happening with these young guys. They've got 3 or 4 traders right now that are so out there in terms of their skill level. It's ridiculous. And they've made a fortune this year. So anyway, they were so busy making money. Scott came in, he was supposed to have a meeting with them. So I said, so Mike said, could you just meet with them? And so, because he was too busy trading, right?
Right.
And I had just come back from the speech. I didn't really have that much to do. So I said, yeah, sure, I'll go in and meet him. I shook hands with him and we started chatting. He's a really nice guy. And I asked him what he did. And he says, well, one of the things we do is we have a signal for the direction the market's going to go in a day. Obviously, it's not going to be right 100% of the time, but it's going to be right. We've statistically looked at this thing. They developed it with this really sophisticated technique where they combine all these signals. And it turns out it has way better than a 50-50 predictive rate. Well, you don't need much more than way better, you know, than 50-50 to make money using options, right? Because we know about credit spreads, right?
Yeah.
So basically, if you've got the direction right, you win, you're going to win. And so, but with a credit spread, of course, even if the direction's a little wrong, you're going to win. That's what makes it so beautiful. So it creates this, it's like a golf club. That's what they call forgiving, right? Even if you hit it wrong, it'll kind of go in the right place. So as long as you have the direction right a lot, right a little, not right at all, or just a little wrong, you're still going to make the same amount of money, right? Think about the way a credit spread works. So we put this program together, and it's going to be it's going to combine a signal with credit spreads. Yeah, and so I've been working on that all year. You wouldn't believe the amount of work to get this right, because there's way more variables than you think there are when you actually start playing with it, with wing width, length of trade, all sorts of stuff. So we got it down to what we want now, and it's very, very attractive. And so the firm's opening up an account for us to trade this. And Scott and I and his partner are going to be trading it in the account. And we're also going to be making a service available to the public, which is another thing that's coming up in January.
Sure.
But so I'm going to be doing my Rhino, and now I'm going to have time because this trade, it starts and stops in 1 minute. I put it on at 9:30 and I'm done. No matter what the market does, I'm done. It could be a total loss, it could be a gain, but I'm done. Just like we had studied in that Orlando thing. So anyway, the point is I'm going to have, that's not that much extra time for me in a day. And, I can afford that time-wise. So that's what I'm doing for diversification in the new year.
Nice.
And now you want to know my advice.
Yes. What's your advice, Mr. Seth?
Well, I would say is this for new traders or struggling traders?
Struggling traders.
Okay. Well, first of all, a lot of the reason, and you are the expert on this, and I've just basically taken pages from your book, but one of the reasons that traders are struggling so much is they keep hopping from strategy to strategy. And what they're doing is chasing returns, and they don't realize it. If you go in and you buy the sector in the market that did the best last year, every year you're going to be the worst investor in the world, right? Because you're chasing returns. You're looking backwards, right? So the traders who do poorly, generally speaking, hop from flavor of the month to flavor of the month to flavor of the month and never actually develop what I call your bread and butter strategy. They never get really, really good at one thing where they're really confident and they really have a good feeling. So that's sort of my piece of advice to struggling traders is find your bread and butter strategy. And it may take you 2 years to find it, 3 years. It's worth it. If you get it, if you have it, then you have something you feel really, really good about. And that doesn't mean that may not change. You may end up or you may be added to. But until you have something that you've been through everything with it, you've lost money with it, but you still feel good about it, right? If you've lost money and you still feel good about it, that's a pretty good sign you found your bread and butter trade, right? And so
that's a good point. Yeah, because most people will just lose, they'll jump to something else, and they never really learn anything. They never really get anywhere.
Right. Yeah, and a similar principle to that, which I always tell people, is it's a very bad idea to ever increase capital on a trade right after you've had a big win. When you should increase capital is after you've had a loss and you watch yourself emotionally and you realize, yes,
I can trade bigger than this. Yeah,
I can trade bigger than, exactly. Yeah. I can trade bigger than this because I know what this trade's about. I know what it looks like when I lose, and I can handle it. That's when you increase capital in the trade, not after you had a big win and you're feeling invincible, and then you're just really being stupid, but you think you're invincible, right?
Yep.
So, anyway, good. I don't know. I got on. I didn't mean to be so verbose, but I just enjoy being with everybody here, so I can't help myself.
Yeah, that's absolutely fantastic advice. And again, Seth knows what he's doing, right? Director of options trading over there at SMB and head of the options desk. So
thank you.
You gotta listen up, man. Listen up.
And great. And I can't see who else is here, but I know it's a bunch of friends, and hope everybody had a great year. Stayed out. Hey, Sherry, how you doing? And so now someone attractive has come on the screen. Right before this, it was
finally. Well,
right?
Susan was here earlier.
What's that?
Susan Fife was in.
Okay, but I didn't see Susan, so I'm exempt.
Okay.
Yeah.
David was there.
Yeah.
David
so so Sherry, you're downstairs, right? And John's upstairs?
I'm in the East Wing. And
okay.
He's in the West Wing.
He's in the West, so he's the president. Right. So what are you?
Yeah, that's right.
What are you, vice president or your chief of staff or what?
Who's the boss again?
She's just the boss. She's the boss of the president.
Whoever's the boss, right? All right, guys, have a great safe trip down to Orlando, by the way.
Thank you.
And thank you, John, for having me on. And thanks, everybody. Really great seeing everybody. Have a wonderful 2021.
You too. Thank you. And Happy New Year.
Thank you. Take care.
Yep. Bye-bye.
Bye.
And let's go.
How you doing today?
Great. How are you?
Oh, it's a busy time, to say the least. But that's a good thing.
Yeah, no, it's been a very interesting year. It's been very challenging in some areas, not so challenging in others, I guess, but very challenging in some areas.
Absolutely.
Let's get going. So how's things going for the year, and what do you think about that?
Well, I think the year certainly has been an interesting one. I think what happened back in the spring was probably the quickest fall off I've ever seen in terms of magnitude, especially on the rut.
Yeah.
And so that was quite brutal if you were in the market and tried to make your way through that. And fortunately I bailed fairly early and didn't have to deal with the full magnitude of the rundown. But I think after it kind of stabilized a bit, it was an interesting trading environment because the volatility stayed so high for so long.
Yeah.
Which made trading kind of unusual from a standpoint. I switched primarily to trading bearish butterflies because the volatility was so high, it suppressed the pricing crazily, and you were able to trade the equivalent of a 56-day butterfly at like 25 days.
Yeah, wasn't that crazy? It's still kind of that way now, even so. But the volatility is really
yeah, it is.
favor.
Yeah, absolutely. Now, even with the volatility being where it's at, when you have a 30% run up in the rut in 30 days, that doesn't work all that well.
Right. Yeah, not if you're bearish, that's for sure. But,
exactly.
yeah.
Exactly. Oh, yeah, exactly. If you're long, you're thrilled to death. But if you're trying to trade that same bearish butterfly that you traded back in the spring and summer, and then you entered and you tried to trade through November, it was a pretty futile effort from my perspective, anyway.
Yeah. So have you found you've been able to adapt okay to what's been going on, or have you been having challenges?
Yeah, I mean, my primary adaptation is because of the when you designed the bearish butterfly back in 2007, 2008, when the rut was 500, 600, 700, 800, compared to where it's at now.
Yeah.
My adjustments were basically twofold, taking into account that the rut is 2 to 3 times the value of what it was when this was originated, and the volatility being so high that the magnitude of the moves, if you, at least from my perspective, trying to trade a bearish butterfly with 20 point moves and making adjustments became very frustrating for me. And so I did a couple of things. I basically modified my trading to increase the width, if you will, between the butterflies. Instead of 20 points, I typically went out to 30 or 40 points before I make adjustments. And I continually used the methodology to kind of trade initially smaller, knowing the market was moving a lot, and then growing into a position by continually adding butterflies at various center strikes. So there were points where I may have started with the rut at, if the rut was at 1200, and I put on, 1180 butterfly, I wouldn't do anything until the rut got to 1240, and then I would be doing 30 to 40 point increments in terms of the center strikes and just grow the position. And there were times when I had the equivalent of 5 different butterflies on that were 30 to 40 points center strikes apart. So they were spread out over 150 points. It gave me a really wide tent, if you will. And because the volatility was so high, even though your pricing on the butterflies that the market outran would decrease, they were already really low. And so when you're buying a butterfly at 350 and it drops to 250, it's not that big of a deal. So that's how I traded it through the spring and summer, and that worked well. Now this past month and a half has been just sheer straight up, and it's every day you watch, and you can expect to see the run up, and even today it's up another 16 points right now, it's just I never imagined that it would move from 1550 to almost 1950 in a little over a month.
Yeah, that was quite a big move there. So yeah, so you've been adapting like bearish butterflies by starting off smaller, right? So you change your scaling strategy, and you also, both from the amount of the size you started with, and also with the magnitude of a move it took to scale in, right?
Right. Exactly. Yep.
Yeah.
Exactly right.
Yeah, I think that's a great adaptation for that. Now, I often get asked about putting wider wings on. Did you ever try that?
Yes, I actually have. I've been working with some smaller trades with instead of 50 point wide, going 70 and 80 points wide. It's still a work in progress, but that's something I'm certainly looking at right now. Yep.
Yeah. I think you were right to go with the scale-in points, because I believe the scale-in points are more of an issue than the butterfly wing width.
Yep, I would agree. If I had these same trades on with 70 or 80 points and the market ran up like it did, it wouldn't have mattered.
No, definitely not. That is a crazy move in the Russell, though. It's absolutely crazy. So, but that's all right. You know, that the market does what it does. We don't know what it's going to do, and we just adapt.
Yeah, absolutely. And that's one of the things that to this day, you talk about looking back and what can you do differently is, going in with some assumptions that something can or can't happen. Well, it was wrong. So, you got to kind of get rid of that mentality, and anything can happen realistically. So don't make an assumption that there's no way something can happen.
Yeah, I like to say, plan for what you think can't happen. And if it doesn't happen, great.
Yep.
But if it does, then at least you have an idea what you can do with it.
Yeah, exactly. Yep.
Absolutely. So what would you say were your biggest lessons learned this year?
I think that, again, this market was unique because of the magnitude of the move in the market over an extremely short period of time because of a black swan event. We don't have them that frequently. We've had them in the past, but this move was something that you couldn't have anticipated that the rut was going to drop the way it did, and then you certainly, at least I couldn't anticipate that it would not only rebound the way it did, but just blow through everything and be at all-time highs, 6 months after the sky was falling. My again lesson learned is you don't make assumptions what the market can or can't do, like you said, and know what your trade's capable of. And when it gets outside those parameters, you should fully expect it's probably not going to work as designed if it wasn't designed to work in those kinds of markets.
Yeah, if that market pushes against it, yeah, for sure. Yeah, that's a great insight. As far as successes for Achieve this year, what would you say was your greatest success?
I think the adaptation of looking at what the market was doing, the type of market it was in, with the volatility environment being so high, knowing that because the volatility is so high and how it affects pricing and those kinds of things, and taking advantage of it. And that's probably something I would have never done 10 years ago. Or even 5 years ago, maybe.
I think like a rules-based trader who thinks they're completely non-subjective is just shell-shocked by this because it's never happened before and they have no idea how to deal with it because they never really looked at trading from that perspective.
Yep.
Yeah, that could definitely be a problem.
Absolutely.
Yeah. So do you have something you're going to do next year to improve your trading?
Well, again, the number one thing is walking into a trade, making a set of assumptions that something can happen. I have to work on losing that mentality. And again, just knowing that, a certain particular trade is designed to work in a certain set of conditions over a set range when you put it on and know what that expectation is. And really don't try to force it when it's not working. I think that's in the past where I've had some major mistakes where I kept saying, well, it's going to work. Keep trying a little bit more and do a little bit more and keep pushing it. And, in this market, as an example, never turned around to this day, and we're only a couple days to expiration now. So if you tried to push that right to the end without saying enough's enough, you probably wouldn't be in a very good position right now.
Yeah, absolutely. And I think what you say is really critical is understanding when whatever trading strategy you're going to do is not going to do well in the marketplace. I think a lot of people come into this and they say they find a trade and it back tested well, and they don't really think about when it's actually going to lose. They just they just have this assumption that everything's going to be okay going into the future because it back tested in the past that way. And as we're shown this year, that's not true, right?
For certain. That's absolutely true. Yep.
Yeah, I think that's an excellent point you brought up. So let's see. One piece of advice you'd give a struggling trader?
Oh boy. I think look at whatever types of trades you're doing, going back and understand what they were designed for, and understand why they failed. If you're struggling, why did they fail? Was it because the market did something where the trade was not going to win? Did you trade it improperly? Did you make some bad assumptions and adjust prematurely? Those kinds of things to really understand what really made you struggle. What was it? Again, your choice of tools in a market where those tools won't work or couldn't work, or was it something else?
Yeah, so you're saying like properly evaluate what's going on and why you're having a challenge with that strategy. Is that what you're saying?
Yep. Yeah, I mean, if you pick a strategy that's not going to work in the market that you're trading it in, you probably didn't do it. You might have not done anything wrong. It just wasn't going to work. And so you just need to understand the difference between I picked a strategy that in this market wasn't going to win and I did nothing wrong. I traded the strategy and it did what it was designed to do, versus I made mistakes and I didn't trade it properly and I made assumptions and did things that I shouldn't have done that caused the problem.
Yeah, because then you'll take the wrong actions to correct it and you won't get anywhere. That's not good.
Right, exactly. Yep.
Right. Excellent. So any last insights you want to talk about?
No, I think that depending upon, the experience of the trader, if you've been trading for the last 10 or 15 years, you probably saw opportunity in this market at certain times, whereas you said other traders who were maybe less experienced and didn't really experience big moves before were really shell shocked. So the insight is, even in this market this year, there were opportunities, and you need to learn how to observe what the market is doing and where the opportunities are.
Right, and I think that has a lot to do with keeping a clear head and not letting this shake you just because you lost a trade.
Yeah, absolutely. I mean, and losing a trade, I mean, if you designed a trade and built a trade with the right type of risk and you lose, okay, you just chalk it up and move forward. But if you trade too big and you can't mentally handle or financially handle the losses because of the trade lost how it would lose if the market moved in a certain way, that's where it can get really scary for people. So, sizing the trade appropriately and saying, hey, if this loses X, I'm fine with it, because if that's what the market does and the trade, it outruns the trade and the trader wasn't designed to win this time, so be it.
Mm-hmm. Yeah, excellent. Yeah, excellent insights there. All right, I think those are all very important things. And yeah, if you ended up trading too much money and you ended up losing on the down move, then yeah, I mean, maybe it's appropriate for you to stay out of the market at that point until you get your money built back up and you're trading more appropriately. But I think, like you said, I love what you said about considering the loss before you actually get into the trade.
Yeah, I mean, you say, oh, man, the bearish butterfly is awesome. It makes X amount every month and it rarely loses. But you don't think when it does lose and it gets in a market that like we just had, and you hit max loss and you see the magnitude of the loss in dollars, that.
Yeah, you don't want that to be freaking you out.
Some people may not be comfortable with it. Exactly. Yeah.
Yeah. Those are all good points. So thank you for coming on with me. I appreciate it. And, happy holidays. I hope everything goes well. And of course, always reach out if you have anything you'd like to discuss or challenges. I always love to talk to all you guys.
All right. Awesome. Well, thank you, John. Thanks for all you do for everybody. And you have a wonderful holiday too.
Thank you. We'll talk soon, Tom. Thanks.
Okay. Take care, John.
Yep.
Bye now.
Take care. Bye-bye. And that was Tom. So let's go back and let's take a look at, or take a listen to the interview that we had with Bill. All right. So it's good to see you. How are you?
Yeah, not too bad. Not too bad. You look a bit of grey as well as, I don't remember you having a grey tash. I've always had a grey beard.
No, yeah, I didn't have a mustache. I just kind of grew it in recently. So
COVID lockdown sort of beards and stuff like that. Yeah, actually, yeah.
You got to change things up, It was an interesting year, wasn't it?
Yes, it still is. I mean, yeah. I mean, my mother is 95, so we've got to watch these things quite carefully. That's been actually one of the more. Everything else has been, it is what it is. But she's fine. But it's the sort of thing you've got to keep an eye on. That's all.
Yeah, definitely, because we wouldn't want to bring that home to them. That's for sure.
No, and we have had people at work die. We've had 2 people at work, unfortunately.
Oh, that's sad. Sorry to hear that.
In one in their 50s and one in their 60s, both men. And quite early in like February.
Right.
So it's not like we haven't been touched by it. You remember I'm in Malta. So, and these guys were not based in Malta. They were based, both of them, one in France and one in Italy. So this was a sort of, the European rampage.
Yeah, and they didn't know what to do with them back then either. They were doing things that weren't very helpful.
No, that's true. Actually, early stages was probably the worst time to get it. Now, at least, probably one would have an inkling of what to do. A little like investing, we didn't know a clue what to do at the beginning of the crisis. Now it's all very, very obvious, but it wasn't obvious at the time.
Yeah, well, it's hard sometimes as information's unfolding in front of you to interpret it.
Yes, it is. And like all of these things, it's like you look back and it seems painfully obvious what was going to probably occur. But it's not a crash that any of us have really been through, is it? I mean, we've all been through various macro and economic events, but not this type of event, really.
Yeah, I think a lot of people didn't know what to expect, and they just panicked. And you saw what you got. I mean, if you look at the size from a point move of 2008, it was nothing compared to this year.
Yeah, I mean, and the speed. I remember the week that it was occurring. I had made a mistake on a trade. I had been assigned on a call spread on Apple, and I ended up, if it was put spread, I ended up being long. Well, I ended up being short in enormous amount of Apple stock when the market collapsed. Now, needless to say, I made some money and got out of it. It was way, way too dangerous to stay in. And but I bet there are 100 stories this year of people who have, things have gone badly or well for them as accidents because of the enormous moves so fast with vol quite high.
Yeah, it's good that you realize too that you made a mistake, you made money, but it's good you realize it could have gone the other way just as easily.
When Apple subsequently, of course, roared back, and if I had still been short, I would have lost far more money. So it's been one of those years where you've had to be, I don't know, watching the screen and the positions and everything even more closely than ever, because it was all unexpected, really.
Yeah, I know. I didn't expect a move like that, but it's a lot better now, though. Was your year in general? How'd you do for the year? You okay?
Not too bad. I wish I hadn't been so bearish. Generally, you look back in hindsight, I'm an investor and a trader. So investing this year was quite easy. One just had to pick good stocks and off they went. Trading was a little bit harder, because at times I probably was a little bit too bearish and hedged perhaps a little bit too much.
I really agree with that, because when I think about some of the behavior I did is I bought a lot of stuff in March. I saw,
yes.
Yeah, I was just sending out. I'm just buying stuff. I said, buy here, buy here, buy here.
Yeah.
And made out tremendously well this year because of that. And
excellent.
But that was more from an investor mindset than a trader mindset, probably. I was like, well, we're on sale. Let's buy stuff, right?
Yeah, exactly. And the trader in me, I did put a couple of positions on, but they're all small and they're all short dated, and they made some money, and some of them did, some of them didn't. But when you invest, there's no limit to the upside, is there?
No, there really isn't. And times like these are like an opportunity of a lifetime, and it's something that I missed in 2008 as a trader. I did very well in 2008, but I also, in my options trading, but at the same time, I ended up pulling some money out of the market near the bottom, and I missed the whole move up. And it's kind of beat yourself up because, hey, you're a trader, you're supposed to know what's going on in the marketplace. But I learned a lot from that, and I learned that if this happens again, the money's going in. It's not coming out.
That's true. I mean, I think the biggest surprise, though, for so many professionals, or call us professional, semi-professionals, was
Yeah.
that it was not a W-shaped bottom, that it was a V-shaped bottom, and so many people, very smart professionals, were saying, wait for the retest, then go all in, and it didn't happen, and that. You made money by either buying on as it was falling, or buying on the first rise, which you and I both know is generally quite a risky option because it always retests the bottom, but it didn't.
Right. It doesn't always.
No,
And
it didn't, and I think that will have been painful for a lot of people and wrong-footed a lot of professionals.
well, even like Phil Town, he's the one who got me into trading, actually. Phil Town, I don't know who he is. He used to be rule number one is his thing. It's investing like Warren Buffett type of thing.
Yeah.
And I saw him a couple of years ago. I went out and saw him, but he's the one who basically called the 2008 crash, more or less, and he made a lot of money on the reversal there. But he was the same thing. He's telling people, wait, the market's going to keep going down. It's going to crash, all this other stuff. And that didn't come to pass. It just goes to show you that even the most seasoned professionals don't know where the market's going.
No, they don't. And I think that I'd heard a lot in March about a lot of new investors and a lot of, they call them millennials, which is probably completely unfair, but a lot of traders coming into the market. Interactive Brokers have seen a 50% increase in the number of traders subscribers. And I sort of dismissed that a bit as well. Are they really going to matter? But actually, they pumped a lot of volume into the market this year, and just kept buying. And when professionals sold, or institutionals sold, or nervous investors sold, they just kept buying.
Apparently, they're still buying.
Yeah, and they still are. Yeah, I mean, look, I'm an amateur, not a professional, and so are they amateurs. But that's supported also some of the rise.
Yeah, oh, absolutely. But I think it's important to just not get fixed on the market has to go up or the market has to go down, and just watch the technicals and look for signs. You get that reversal sign, you take it. If it reverses back down again, well, you get back out again. But we did have, unfortunately, like I said, sometimes a trader will be convinced the market's going to keep going down. They'll take a short position and they'll hold it even till today, even though we're on all-time highs, through something like that. And you just don't like to see that.
No, and it was difficult shorting this year, and I had some painful experiences as well as some successes. But because like you, I invest and trade. Some of the trading hedges off the investing, and it was prudent to hedge, because who knew the outcome, or when the vaccines, or that the vaccines would be found
this
to be
fast
so
or
successful.
And we still don't know how effective they're going to be, and we still don't know if there's going to be side effects. So that's even something that's still out there. So.
And the rollout, how long it all takes, but I think it's relatively optimistic, the view. So that's why markets are at all-time highs as we talk.
Yeah, they are. It's just been a really interesting year. So would you change anything if you went back and relived 2020?
If I was going to do it again, and I experienced it again without hindsight, then I probably would just be less bearish, and not listen to the macro news, and try. We all know this. You've taught us. Look at the price action, and I did endlessly look at the price action. Was quite comfortable with it. But it was really hard this year to shut out the macro news, because it was just endless and relentless and everywhere. And even though I try not to watch CNBC and all the others, you think, well, what's happening? What's the COVID rate in so-and-so? And you look on the website. So, it's an old story. Ignore the macro. Look at the price action.
Yeah, it really is. It really is. The
You know,
market's
you've
going to
taught us
do.
that before.
Yeah, and I have to keep teaching myself that because it's the same thing. You know, you have to do it. I'm happy with this year. I actually called things really, really well this year, so I'm happy with that. That hasn't always been the case. It's not always the case, but this year worked out really, really well. So lessons that you've learned.
Lessons I learned. I'm just having a look at my little my notes.
Sure.
Okay. I mean, lessons I learned in terms of investing this year was lessons I've already been aware of but relearned, and that is you look out 9 months. And it was always 9 months. I think I mentioned you before that I've been an investment professional for many, many years. And even back in the late 80s and early 90s, the mantra was, you know, when it's really bad, the situation, you just look forward 9 months and you work out how might we be in 9 months' time. And that lesson was one that was sort of, you know, hammered home this year. When all my friends were saying, you know, it's all falling apart, I was saying, well, 9 months' time, there could be some travel again, or a vaccine, or whatever it is. So, you know, from an investment viewpoint, that's my lesson learned.
Yeah. I actually wish I had been a little bit more aggressive, even though I was fairly aggressive with the buying earlier on. I wish I was a little more aggressive.
Yes, I have made up for that during the course of the year by doing quite a lot of call spread leaps. So, you know, buying forward 12 to even 24-month positions on the basis that within a 12 to 24-month period, there will be a recovery of many of the stocks that are still, you know, some of which have gone up quite a bit, but some of which haven't. So here's an ideal option strategy. Yes, it's not market neutral strategy, but it's an option strategy, and we have to understand options to be able to do any sort of strategy. Right. You know, and an out of the money, you know, call leap 12 to 18 months out on a large liquid blue chip name will return you far more than buying the stock. A little like very similar to your Super Bulls.
Sure.
Yeah. Basically, it's just slightly further out of the money than a Super Bull on an 18-month or 12-month period on the index or the stock.
Yeah, just giving it time to do its thing and limiting your risk. It's a good deal.
And the payoffs are quite large, much larger than if you actually bought the stock. They're generally about a 200% payoff.
Yeah, no complaints about that, right?
Yeah. So anyone can, any of us can do that with a down, you know, so a downside of $2,500, the upside is $5,000. It's not crazy big trades, you know.
Right, and it's long term, and you have time for it to work out. You don't have to worry about daily price movement and watch it all day. It's good
risk
stuff.
Is controlled, and you know you can pick the names or do it on an index that you're comfortable with that's going to perform. I digress, but that's just an example of a lesson learned this year. The 9 months, you can put that into an option strategy.
Yeah, absolutely. Yeah, there's just so many things you can do with options, and it's so dynamic. It's really great to learn them. So for sure. So let's see. What other notes do you have? We'll go there.
Let's have a look. We talked a little bit about the fact that I'll be less bearish and take on risk faster. Sounds similar to yourself. I would. You asked me. I got a couple of questions from Sherry. For instance, if I was starting out trading again.
Oh, that's a great question. Yeah, if you were starting out.
And I've been trading now for 5 years. Some of these are obvious ones. You know, the usual. You know, which I totally didn't do at the beginning, which is start small, don't take on too much risk, don't try and master too many trades. You know, you teach us quite a lot, but I haven't been able to master them all, but I have got quite good at some. And one lesson is slightly strange. for the sake of your sanity, as in mine, and perhaps also your families, don't imagine that you've got to have a trade on with an open position 365 days a year, because I think for nearly 5 years, there was not one day that I did not have an open position on. And this year, I've cut that back and been a lot more focused, looking at the price action in order to choose when to enter trades and when to exit them. And that's reduced my stress level a little bit because I haven't had multiple trades on all of the time. The trades might be a little bit larger if I've got smaller numbers of trades. And in an environment like this year, I've tended to take the profit faster, smaller profits faster, in order to just, stay calm, because the unexpected was round the corner. Some big vol spike would wipe out a relatively modest position quite quickly. So, take a 5% profit rather than, hang on in there to squeeze out that last bit. I think this has been one of the years where, I've rather taken smaller, profits than run them into, closer to expiry. Although I understand lots of traders like to run them closer to expiry, but this year's been one of those years where an unexpected move can be quite painful because of vol being quite high.
And an unexpected move is quite common. I'd like to add.
Completely, and that perhaps is another lesson that we've learned this year. Expect the unexpected. Another comment I often make to myself, and therefore applies to any new trader, is the market will often deliver the maximum pain to you on your trade. You will be forced out at the bottom, and the day after you are forced out, the market will recover. Accept that, limit your trade size, be prepared to exit and move on. And I've had a number of those market punishing maximum pain trades this year. Sure, I've had some successes as well, but as well as I do that we feel the pain and the losses far more than when we tot up at the end of the year the successes.
We saw that a lot in the bull trade this year, for example, like the non-subjective bull trade. The market would go right down, would stop us out one day, and then rocket the other way, and that was the end of that. So, you don't want to take the wrong lesson from that and say, "Oh, ignore your risk that you have on the table."
I have experienced that a couple of times this year on the bull trade. Rut was obviously, knocked back a little bit worse until it began to recover better. And I have begun to time entries into the bull trade a little bit based upon Keltner bands. I try and get in when the rut is at the lower Keltner. And avoid getting in if it's at the upper Keltner. Nothing very crazy scientific there, and there has been a bit of back testing done by myself and some trading buddies, that you in the same way that enter a bearish butterfly after the run up. Although this year I have had a couple of max losses on bearish butterflies, entering them after enormous run ups, only to see another enormous run up. So limiting position size, getting out at max loss, all the lessons you taught us have all meant that the losses haven't been more than ML. And the winners sometimes aren't as much as profit target, but they've been happy to take.
Yeah. As long as we make out well over time, we are going to go through these cycles, and we have this is not a neutral market.
No, and in that respect, I have taken more positions based upon directional strategy than ever before this year. So taking bull strategies, taking super bulls, taking call spreads on indexes or individual stocks, controlling risk as usual, because they can run away from you very, very fast, in these types of markets, has been quite interesting this year. And I would love to get back to an environment perhaps next year where we can, well, personally, I can be a little bit more market neutral,
Right.
and a little bit less directional.
Well, you'll want to be, because at some point the market's going to flatten out. And I mean, the directional trades aren't going to be making money like that anymore. It's going to be a little more challenging. And, that's why it's good to have both of those things in your toolbox. You can go directional when it makes sense. It's good if you understand the market action, and you can go more non-directional when it really doesn't make sense to be directional, because it's, we're
It's
neutral.
all by going directional this year. It's also been a year where everything that we've learned about options has been important. Unbundling them, working out, what you can do a calendar. I mean, calendars haven't been bad, obviously, this year, but you've got to understand, why has the calendar worked this year? Rather than just simply in the old days, I follow the M3 rules, I follow a strategy, I follow bearish butterfly rules. This has been one of those years where, for me, it's been a great experience to really understand what the options are going to do. And I suspect that some people will have bought just, long call options thinking, wow, this can make me lots of money. And then as the volatility has come out, I've been surprised that actually the prices of the options can come down, even though the market's going up. And maybe spreads can sometimes be better, and why that is the case. And that all comes from time spent, with you and listening to understanding how the trades have all worked.
Right. I've always been about that. If you go back and look at me in 2007 when we were doing the webinars, it's the same thing. Understand. And I think traders come into this business thinking they're going to find a trade, and they're going to stick it on, and they're going to make money every month forever into the future. And that's just not reality. It may be okay for 6 months or a year or maybe in 2 years, but the market's changed.
And they appear to change quite a lot, quite often, in the sense that, I've been trading following you for 5 years. Goodness, I can't believe it's such a long time.
Wow.
And during that
It's a long
5-year
time.
period, there have been quite a lot of different changes in the market environment. In fact, I feel that no one year has been the same in the past 5 years. Each year has been fundamentally different. And I know we always think in calendar years, and there's no reason why we should, because the environment might change June to June, but we always think calendar years. And the fact is that everyone needs to I think, at the end of the year, as I'm sure most traders do a complete stock take of what worked, what didn't work. What are you going to do differently next year, which is often a question you ask me. But of course, it depends a bit on the environment. Because if you asked me that, last year, I said, well, right, I'm going to do this, and this, and then we'd have all been, thrown apart in February. So I had long lists put together, which date back several years, about what to do in market crashes. And all of those got dusted off in February and March.
That is the good
years
thing.
ago. And not looked at them for several years.
Right. And I was just talking to John Wilson before you came on, and he said the same thing is, and I've said this before too, is that the market's likely to settle down. It's likely to go a little bit more sideways. Implied volatility is probably likely next year to get more back to normal. We're not used to trading that environment anymore. We need to go back and we need to practice it. It's just it's like as soon as I see the market starting to break down like we did in February, I'm going back and I'm back testing 2008. I'm back testing other market crashes just to get myself familiar with doing that again, because it's very different.
It is completely different. And I rely heavily on lots and lots of notes and lists and things that I can dig out at a moment's notice and sort of remind myself of a dozen lessons that you've taught us in various presentations, and emergency, plans, which have really not been tested. And we're only really tested for a short period of time this year. Because, and by the time you learn the lesson, it's gone. You get yourself all bearish. You'd understand, right, I know exactly what to do if the market keeps crashing. And it bounces. And you go, no, it's going to crash again. I'm ready. It's going to crash again. And it doesn't. Right. So you've got to be ready before it happens, almost.
Well, what I've noticed over the last several years, and I don't know if I've said this too much publicly, but I've been talking with Stephen about this for a while, and the markets have been getting the market conditions have been shifting faster and more frequently and with greater magnitude than ever before. So in other words, we used to be able to get into a market condition and stay in that condition for a year, 2 years, 3 years.
Yep.
And then it would shift to something else for 6 months or a year. Then we shift to something else for a couple of years. Now you'll get, I mean, look at 2018. We had a market crash. We had a relentless up move into the beginning of the year. We had a market crash. Then we had a relentless up move. Then we had a market crash, right? It was just like back and forth. And then we calmed down in 2019. Then we, have an even bigger crash in 2020. It's just getting more and more variable.
I do think that that's why some traders need to also make sure that they're investors, because I deal a lot with clients who are not that experienced, and for many clients they only look at the valuations a few times a year, and to them a lot of what's happened apart from the news is meaningless because their portfolio doesn't really seem to have changed that much. Maybe down a little bit, maybe up a little bit, because they don't have the time scale that we do when we look at each day. And I think that if you're only a trader, you can trade yourself out of money, because you remember that you've got to have some, and I know you talked to us about parking portfolios and other assets, but you've got to have some assets that you can actually leave alone in this environment, and you have to leave alone. And how many investors will have sold good quality assets in their 401ks into the fall, into March, determined that it was the end of the world, and not bought those back?
Yeah, that's the sad part. We did see a lot of people. I mean, not luckily, I don't think in our membership, but I did hear of a lot of people who got out near the bottom. They just, they just panicked out.
You know it'll happen because that's what market psychology teaches us.
Especially if they were in their 60s, they're like 65 or whatever, and they,
they just had enough.
Yeah, they just had enough, and they pull it out, and then.
So tremendous discipline is required, and being
that's
in an
another
environment.
reason. That's another reason why you wouldn't want to solely be an investor, because as a trader you can make money during that down move.
Completely. So having a balanced strategy of both investing and trading, I think, is critical, and being part of a community where you're able to sort of spot check with other people, how things are going, is quite important, to make sure that you're not the only one that's sort of worried about things, and I think that's important.
Yeah, I believe it too. So actually, we should probably wrap this up because I'm keeping you later than I told you I would. Any last comments or words?
I think that we've got quite an optimistic period ahead of us, but I can imagine for most people, most of the traders who are based in the US at the moment, it must be quite difficult because your COVID situation is worse than ours in Europe. And all I can say is, you got to look forward 9 months. And I think that people will not be optimistic enough. They'll be surprised by how well potentially next year could do.
Yeah, we'll see. We'll see. Like I said, nobody knows where the market's going, but we watch the technicals, and when things
price
turn,
action
we
will
trade
tell us.
That's right. Watch our price action. Well, thank you, Bill. I hope you have a great Christmas and a happy New Year.
And you, John, thank you very much for giving me a call and talking to you. Great to speak to you again.
Yes, great to speak to you.
Okay.
Okay, so that was Bill. And let's see, we have lots of great insights from Bill. Let's see, we have 4 traders left, I believe. Let me take a look at my notes here. John Wilson next. Then we're going to move on to Chris, and then Tano, and then we're going to wrap it up with Stephen. Stephen is our mentor, right? Stephen Hammett, and he has a lot of great insights there as well. So I encourage you to hang on and listen to Stephen when we get there. For now, let me put on John Wilson. He is always very entertaining. And this is John Wilson. He's been with us for a long time, successful options trader. And hi, John, how are you?
Hey, pretty good, Dr. Locke. Thank you.
All right, that's awesome. So you set up a PowerPoint for us, and I think that's awesome. So let's, what do you got going
Yeah,
on?
yeah, let's see. Yeah, you can see me right here. Okay, perfect. So yeah, this kind of a guidelines, and some of these slides, folks can come back later, right? We don't have to spend too much time, but I like
Sure.
this. It keeps us. It keeps us not. We'll get off like tangents here.
Well, how you been? How you been dealing with the pandemic, and you've been trading okay?
Oh yeah.
Yeah.
Well, it's funny because I mean, I'm working as a financial advisor. So what I'm saying is not, I have a disclosure. So yeah, we work for a financial advisor. We don't do any options. It's all.
I'm not, but you are, so that's good. And
That's right.
I'm not
Yeah,
a financial advisor, but I have financial advisors who actually listen to me, so that's pretty cool.
Oh, that's actually, I'm impressed. I mean, yeah, well,
There
I
you
guess
go.
I'm one of them. Yeah. So, I'm not sure any financial advisors in the lock community, but I started about a year and a half ago. And just because after about 7 years in my basement, I wanted to get out and help folks. So I've been doing that. Love it. It's different. It's totally different. But I've learned
sure
a lot
it
of folks, yeah, they don't want to deal with this. And so I'd rather help them in
Now,
some bank.
how were your customers during the big crash there this year?
They, it's all about just education. I mean, you get the whole gamut, especially up here in the Rockies. We have a lot of tourism, so they've been hit hard. That group, but everybody's up this year. But it's just, I guess, set expectations. I mean, you don't. If they're retiring, they need the money in a year. You don't put them in Tesla. Well, actually, it would have worked out well.
That would have worked out pretty well, wouldn't it?
It would have worked out great. But no, you know what I'm saying. Yeah. So we try to keep it simple, but I mean, we kept our offices open. But at the end of the day, it's great because I mean, I'm in Canada doing the Canadian markets. I mean, we do outside Canada too, but we're allowed to trade, US, and options are not. We can't do options up here. So at least where I work. So it works out great. And help folks out, and then I just love the options world. I'll never stop doing this.
Yeah.
Right? You too, John. We'll be doing this when we're 80, 85, 90.
Yeah, we'll just keep doing it. There's no reason to stop, right?
Exactly. I might be a little more risk taking by then. But all in all is going well. Thank you. Too bad I missed last year. So enough of looking at my ugly mug here. Let's go down to the next slide. Here's my disclosure. Very deep. I usually got, some lawyers. This is John Wilson's opinion. Trading is risky. If you follow what is mentioned in this presentation, you may lose all your money and find yourself living under a bridge. That's not healthy for a marriage. So enjoy it.
I heard adversity brings you closer together. So maybe it is good for a marriage. You don't really know.
Maybe it is. How about yourself? I didn't ask you. You and Sherry with the lockdown back in March and April.
Yeah, I mean, we're fine. We work from home anyway, so it wasn't that big a deal. And we got our Florida fix in before the big whole thing came down. And we got, we were back here. But yeah, I mean, I've been kind of bummed out as far as we're not getting out and doing stuff, and a lot of stuff's closed. But everything else is fine. So
right. Yeah, no, it's good. It's interesting. We're up here in the mountains, so all the trails they were closed, but how can you stop people walking on trails? So,
exactly.
I mean, but Banff closed. You're not allowed to enter Banff at all. Banff Lake Louise. They literally had people turning cars around. So,
that's interesting. They had some spots here I think they closed as well.
They closed it. Oh, okay.
Yeah. Walking out in the woods is going to get you COVID. I don't know, but I don't understand the logic behind that, but you never know. It's the same thing we had. I don't know. Did they do that in Texas? They closed the restrooms. They closed all the public restrooms, and then they put porta potties out in front of them.
Is that right? So
Yeah.
Yeah.
So, I actually have a picture somewhere. They took the public restrooms, all these areas, and they closed them. And then people whined about it, so they put porta potties out there. Those little porta potties, and I'm like, those are cleaner than a restroom. I mean, how does that work?
Man, that's interesting logic. Okay, those are my boys from Texas thinking it through. All right. And speaking of that, we'll get to Texas in a second about Steven. So hold on a sec. Yes, we'll keep going. Yeah, couple of ideas to keep us in line here. Keep me in line in my idea. Message for a struggling trader. Some words of wisdom from John Locke. What did I learn in 2020 and 2021, which is right around the corner? Thank goodness, right?
Yeah, I know it. We got a vaccine coming out. Everything should be better, we hope.
Oh yeah, lights at the end of the tunnel. Here we go. Oh, I was like, okay, what are all these thoughts that I went through over the last 8 years? I started trading options around summer 2012. And I just like threw out some thoughts, from I'm useless to, I literally cried over a trade to, this emotional roller coaster. I killed it this much. I got it. I stare at my screen all day long in my basement and go on from there. And then at 6 p.m. Eastern or 4 out here in Mountain Time, where's the ES? Every Sunday, always looking at it. And then I'm like, Tasty Trade, John Locke. I'm like Jekyll and Hyde. What's my style? What do I do? Tom Sosnoff, John Locke. Who should I date? And then follow the plan. Everything will work out. So emotional roller coaster. So
I think a lot of people
did I
go
do?
through this, right? They come in here, and I think the expectations when you get into options trading is it's easy. You go in, you open an account, you make money, and I'm going to go out and make $1 gazillion, and everything's going to be fine without any real effort, right? So
Hey, I heard the advertisement on CNBC that said, call this number, right? Yeah.
it did, yeah. CNBC told me that. So
That's right. It's true. So, I mean, obviously some of these are more in the, they'll pop up every now and then, but we're human. But
when we talk
I
about
have to-
feelings, though, John, interesting
Yeah.
thing, right? So we just went through this huge crash or whatever, or how would I say? A lot of people, when they lose a trade or they draw down for a month or something, they kind of freak out if they're actually options traders. But then they'll have, I don't know, $1 million in their 401k plan, and that'll go up and down 250 grand, 500,000, and they don't even think about it.
Exactly.
Right?
Right. Yeah.
So-
That's decades down the road. Yeah. I don't have to worry about it. Right.
Right, but the logic behind it, and that always has baffled me, because I mean, they're so concerned that they drew down a little bit, but they're doing better than their 401k did, and
Yeah.
I mean, it's like,
Yeah.
what's the real big deal? And I think it's just because people attach so much meaning to losing a little bit of money or not winning a trade that it becomes detrimental to them.
It's true. And it's funny you mentioned that, because as an advisor, you're trying to set expectations with a client, based on the risk tolerance time frame. You're just trying to say, hey, do you understand the market goes up and down? When do you need this money? So, but we don't do that with options. I think it's we want to win every month. At least I'm guilty of that.
Oh,
wanna
I
win
am
every
guilty of
month.
that too. Yeah.
Yeah.
Especially when we're first starting, if you
Oh,
don't,
man.
if you're not like ahead every day, you even break it down to every day, right? You watch the money every day. If you're not like ahead
Exactly.
every day, you think, oh, something's wrong. I'm doing something wrong, and there's a problem with that, right?
Yeah, forget every month. It's every day. Exactly.
Right.
Yeah. That's well said. So here we go. So what's the vaccine to my little disease here? Or what was the remedy? We got Sherry, Stephen, and John. Added some little color. Sorry, Stephen. Yeah, I made a Mongo from Blazing Saddles. So I got to give him I'm from Dallas originally. He's from Fort Worth. I gotta do that.
We
But-
should have Steven on now.
Exactly. Oh, he's gonna say, "Come on, man, why that?" But I try to give him like a cowboy, but no, I made a Mongo. But yeah, this is what helped me as a community for the folks. I mean, I'm just looking at the numbers in your community, John. They're growing, so you must have a lot of new folks. And I'll just say, hey, whoever is in the community now, you're very lucky. I went to like an Invest Tools in fall of 2012, and some random person mentioned you, just randomly.
That's
So
funny.
yeah, how lucky am I that I heard that? I sat down next to that person. So who knows where I'd be today. But yeah, so you're in the community. It's helped me. And then obviously the back testing and journaling, kind of showing my mindset, like what was I thinking? And some of it's rated R, I guess. Some of the words I
I can't
use,
imagine that.
That's right. Like, what was I really thinking? But that helped me, right? To go back, maybe also cleansing the mind, get it out, release. But yeah, if you're in the John Locke community, you're in good hands. So that's helped me get through all these little, I guess, verbiage that we all go through, right? So
Yeah, I
and
mean,
it's
we all
work
have
in
these
progress.
feelings, and I think people think that because I'm the teacher or the instructor that I don't go through the same thing. And the reality is you do go through the same thing. You go through this. I mean, it's just human mind.
Yeah.
That's the way that it works, So you just have to
So
deal with it, learn to work
Superman even has a little kryptonite. Nice.
with it.
Okay.
A little bit.
No, we're all human. We're all human. And I think it
Yeah.
makes it better too, because and we work together. We I guess the word feel, and that's going to go into my next topic is add the E there for like, John Locke, a little bit of a, so let's unlock the toolbox. And so I'm referring to the John Locke toolbox. And so what I did here is I took your trades. These numbers are on your website, and I just went back to 2014 because some of them go further, way back. So try to keep it simple.
And you did this kind of like at Hawaii, where were we, in Orlando as well, right? We did that. We did the demonstration there.
Yeah. Right, exactly. I didn't go back to October. I didn't add November, so it's not up to date fully, but it's close. And on the average, I took, I did a sort. Obviously, the rocks at the top, and the bull would actually be higher. But if we added 2013, and I think November is a great month. So
we've had a couple of really tough years in the bull trade. So and understanding why that was a tough year for the bull trade and not tough for the Super Bowl is an interesting journey in itself, right?
That's well said. And look at these. Look at the 2019 and compare that to the Super Bowl and bull, right? And in 2020. But that's interesting. But one thing, when you look at these numbers, a lot of folks will say, "Oh yeah, okay. Which one's the highest? Okay, let me ask a little more. I want that one. Yeah, it's like on a menu. Okay, I want the dessert first. But let's. Then you might say, well, that's more complicated. I'll go to the next highest. That's probably easy. Just work your way down. My advice to folks who are struggling is feel the trade. You know what a rock trade feels like when it's 2 days expiration, and what does it feel like? Can you do that? I mean, put yourself in that situation, right?
Exactly.
So because it's a little different feel when it can be a hot tamale. So, but it's amazing. Obviously, look at the results. So anyway, that's. And I'll explain what
that's just
trade.
Been a fantastic strategy. Yeah, for sure.
Oh, it's been. I don't know what year did you discover the strategy? I have to ask you.
Well, I put the strategy together back in 2011, or 12.
Was that right? Okay.
Yeah.
So you went bearish butterfly. Of course, you changed that a couple times. M3, then rock, because you had to add those two first for the rock, right?
Right. Well, see, the M3, realistically, the program didn't come out till 2011, but we've been trading it within the community that we've had, which was extremely small early on, right? But we've been trading that since 2007.
Oh, okay. That's a long time. I didn't know.
The bearish butterfly actually came after the M3 was my method 3, right? So the bearish butterfly came 6 methods after the M3.
So what was method 1, John?
That was an expanding butterfly expanding into a condor.
Really?
Yeah.
Okay. Yeah. I was trying to think of your condor trade you took off. You had, remember that? I forgot the name.
Oh, we had a V condor. Yeah.
V condor.
Super simple spreads, which I don't like that strategy actually that much, but people wanted one, so we stuck a condor out there.
Yeah, back then. Yeah. Okay. Yeah. No, it's interesting to hear. To try and go look behind the curtain a little bit. Okay.
So the rock trade's really been around. It's actually an M17, what we would call it. It's a variation of an M17 or an M18, if I was to give it the designated name. And what I tried to do is with the strategies, with the M3 strategy and the other ones, is I was trading a certain way back in, I don't know, 2007, 2008, that was a bit subjective.
Okay.
And I tried to create a process where people could learn to trade that way. And ultimately, that's the M21.
I was gonna say you went a little too advanced too soon. It sounds like
right. In other words, it'd be almost impossible to teach people what I was doing back in 2007
with no foundation
of anything. Right. You'd have to do that. So I'm thinking, well, how do I get people to M21? How do I do that? And first is, I said the bearish butterfly just happened to be the first program, but their first official program. But my thought was take them to an M3, take them to a bearish butterfly, there's different skills that you learn in each one. Take them to a rock trade where you add additional skills to that, and then bring in the technical analysis and stuff and the market
Okay.
opinions and go into the M21.
Yes. Okay. The logic at that time going through. Okay.
Yeah.
Yeah.
That's
It's
how
interesting
it
how it evolves, right? I mean, heck, 2005, you're already doing options, right?
I didn't even know what an option was in 2005. So
Talking about, oh my goodness. Yeah. It's interesting. Yeah, this the game of life.
but that goes to show you how quickly you can advance in this.
Right.
Right. I mean, I was doing well. I learned in 2006. I was doing well in 2008. It was a fantastic year for me, and the market had done things it's never done before. So
Yeah. And 2020 is probably one of your best years now. Over
2020 is my best year I've ever had. Yeah.
Excellent.
Yeah.
Yeah. No, it's a great year. This is a good year.
Yeah, it really is.
It is. You have a very unique year. So what I was going to tell, so folks see this menu, you're in the restaurant of John Locke. Okay. So you have this menu, everyone is seeing this. I kind of put it, and I was like, all right, how can he help someone out? And this next slide's pretty, here it is. Okay. There's a lot going on here. So I just recommend someone that you just take a picture and just move on. But the point here is if you have trouble, you saying you want to win every month, well, put 2 trades where one will somewhat, maybe not lose, but will not do as favorably. And I put an arrow here, because these are my favorite. I love the version 22. I love.
Oh,
the
that's
Export
interesting.
series.
The V22 Super Bowl. Okay. Yeah.
Yeah. So those are my 2. These are great trades. Well, V22 does great.
It usually does well. It usually does well in downtrending markets, like
Right.
in certain implied volatility situations. Like we had a fantastic stretch with that in, I think, March, April, May, or June, and then it kind of fell out of favor again. But the Super Bowl, comes right back in, right?
It just comes back, right? So if you put them together, it's those are pretty solid numbers. As a matter of fact, my question to folks: look how many red years are on there. There's not a lot of red. I made these, you can see like the first one for version 32 in Bearish Butterfly was 50-50. So I did it really quick, like half and half.
Mm-hmm.
You need to look at your loss parameters and maybe the rock, you need to look at, I just kept it simple here to try to.
Yeah, sure. Just give some examples. Yeah, great.
Just give some examples. No order on the average on the right. It just threw it out there. It just having folks find 2 trades, maybe one's bullish, one's bearish, keep it simple and put them on, and it teaches you to lose. So if you're having trouble trying to win every month, you will lose maybe 1 trade, but look at the results. They're pretty solid. So I thought that was kind of nice to just throw some, it helped me out because of my back testing. I was like, hey, I could do this. That's kind of my default right here versus being more subjective. I prefer to be subjective, but
yeah, well, like I said, that's one of people's biggest challenges is being able to see a losing scenario within their trading, right? I think a lot of our types of traders, they come in, they get away from directional trading because they can see the loss potential in the trade. So they come over this, and then they try to pretend there's no way that they can lose. And then when they do, they're shocked. It's like, well, no, all trading's that way. I mean, it's a game of chance. Right. So
yeah. No, it's true. It is a game of chance, but this is a great menu. I mean, these are solid. So, I mean, just on behalf of the
team. This is coming from a financial advisor. Solid.
No. Remember the disclosure. We don't want to live under a bridge yet. Yeah.
We don't want to live under a bridge though. So I'm sure don't do that.
That's right. Oh, no, these are great trades. Yeah. Can you imagine though, as an advisor, can you imagine like, I don't know, 80 different accounts and you're sitting there trying to do the options trades for each account? Oh, it'd be crazy.
Oh, that would be crazy. Yeah.
Yeah. It would be pretty crazy. But no, at the end of the day, the Super Bowl trade, which you designed, I think that was in Florida, right, John?
I did that for Florida. Yeah, we did that in the Trader Transformation Workshop. We designed a bunch of trades, and the funny thing is, the Super Bowl, it's so simple. From a statistical probability standpoint, it should only win 40% of the time, but it wins 85% of the time, which is actually, I think that is actually the highest win rate probability strategy in actual live markets is any strategy we have.
See, who would have guessed? That'd be interesting to put the win rate in one of these columns. I'm curious. The Super Bowl would be higher than most of these you're saying.
Yeah, it's definitely, the bull wins about 75% of the time. historically,
Yeah.
you know, in actual results. The Super Bowl wins about 85% in actual results. Most of the other stuff is between seven, like an M3 is in the like 70, is just about 80%.
Okay.
M3 is about 80,
Yeah.
a little over 80%. If you want to compare some other strategies, like a Rhino is like about 80%. It's about the same as the M3. You almost get identical performance between the two. But that's,
And
yeah,
the
even though,
UB1, I didn't put that in there, but that's
yeah,
the
yeah,
Yeah.
that's fine. But as
that's-
far as
yeah.
win rate, that is the highest win rate strategy that we actually have,
Who would have guessed that? That's pretty
which
good.
is crazy.
That's great. No, it's illogical if you think from a, really just
Well,
look at the options chain. It has this percentage. It just doesn't seem.
I like
right.
to look at it now and say that it points out how wrong the typical beliefs are of traders, options traders, when they come into the marketplace. They're very, very off for the most part, which is why so many people have trouble. Doesn't seem logical.
Right. Interesting. That's logical. That's the word. Yeah, we'll move away from that one now. But yeah, so my approach, I don't know if it's logical, but I love the X4 series. The 22 and 17, solid. I love the SPX. It's funny because I used to be a big M3 trader, but once you presented this, I've been doing this. That's all I've been trading is the X4.
Awesome.
For the
Yeah,
most part, right?
And we have a path in the X4 too, trying to get you into being more subjective trader as well. It's just doing it with the SPX a little bit differently.
Right. Exactly. So yeah, the Frown world, high skew, flatter skew. There we go. Higher vol. We're kind of in that now. We might be on the fence. We're jumping over. We might be changing soon, but we'll find out. But yeah, the last 9 months ish have been.
It's definitely been insane from an implied volatility standpoint.
Insane. Yeah. And you talk all about that. Look at the price of a fly. Look at the look at the back hump and all that. But yeah, so. When today's world, it's basically the 22 or a version of a broken wing butterfly, 22-ish. And the other one is it's version 17. And I use about a 5-to-1 ratio with a rock to 17. I think you would say 4-to-1 because the loss ratio, right? So, but that's, you keep it small. So that's on the steeper skew days, which it seems so foreign, but you have to go to the batting cage. So as we're getting closer to these steeper skew in lower volatility in a smile world, I'll have to go back and back test, get my version 17 of rock world, my mindset back on, because it's been a while.
Well, right? That's the thing. Yeah. And it would be good to go back and test some of those markets, because what happens is people, they either modify or adapt their strategies or create strategies that tend to do well in this environment. And then when it switches back, they have no idea what's going on.
Right.
So the first thing you should have done when the market started crashing is going back and run some back tests back in like 2008 and 2011 crashes and stuff like that. And you could have been a lot more adaptable, a lot more quickly, because you kind of get used to it. Like you said, you practice a little bit.
Yeah, exactly. August 2015, Q4 2018. You got these moments where you got to and that's in my little arrow here. You'll see it says, "What's your go-to trade when everyone's running for the lifeboat?" So it's you start to see it's a nice little uptick, and you see a bar goes down February 24th, 2020. It's a Monday. You get a big down bar. Should I jump on the lifeboat yet or not? So what's your trade? What's your go-to? Is it buy a put? Is it is it jump into version 22? So everybody should, at least that's helped me out. I have my lifeboat trade, and I'll jump into.
Oh, I see what you mean by that statement now. I was kind of wondering what that meant. You're just saying when the market starts to fall apart.
Yeah, or it's going. Maybe you're in a version 17. I'm in the lower tier here, which the steeper skew world.
That's the advantage to get into the subjective trading, right? Because we can have expectations. We can set up our expectations for what the market should do. And then when all of a sudden it's doing something weird, like you get a big range expansion like that, and maybe you drop down into a different trading range, right? And I look at the trading ranges as zones, right? And if I drop down into, if I start to get a very large movements very quickly down into the bottom here, then I'm cautious, right? You might want to protect that support level at that point.
Right.
And then if it
right.
breaks that support level, now you're trading in a new zone and you have new conditions, and you're going to need to evaluate that and do
To
that.
adapt. Yeah.
But if you're in a 17 and you see that, you break that zone, you know that's not going to be good for 17, right? Or at least it
Right.
has the potential. So we drop out of that. We go into something else.
Yeah. Yeah.
Yeah.
Yeah. That's great. You explained it really well in your presentation about the M34U and using, I think you use a calendar. A couple of, yeah.
You're right. Yeah, calendars are good in very certain,
was-
in specific
yeah.
circumstances. They can be very, very
Right.
effective. Yeah.
Yeah, that was nice. But that's kind of like, what's everyone's, I call it a lifeboat trade, like, you know, to keep
Yeah,
you.
right. Yeah.
If-
What are you
when
going
the-
to do?
when the Titanic is sinking, you got to jump on a lifeboat. So
And that can be
that's what-
cash too, right?
That could be cash.
Yeah.
Exactly.
Everybody keep that in mind. There's nothing wrong with being out of the market if you don't understand it.
Exactly. Right.
Yeah.
Right. I think that's what Black Pier, they sometimes they jump out. And,
Well, that's what he's doing now, right? He's
that's what he's doing now.
As soon as he sees, well, last time I talked to him anyway, right? So Ryan is, people who don't know, he was one of our past successful traders. You can look at his stuff. But yeah, he's basically looking for early signals the market might reverse, and he's hopping right out. I mean, there's disadvantages to that also. I mean, you get in and out of the market a lot sometimes. You get chopped in and out. But yeah, it's
Right.
it's you can do that. And that's I'm kind of doing that too, but I'm waiting for a more defined signal.
Okay. And it's also,
Right.
you can say dry powder or what have you, whatever the term, but that's, I just wanted to share a little bit because I'd like to, the tools you've given us, there's some great tools.
But you should think
for
about that.
Lifeboat.
What are you going to do when things start to fall apart? And how are you
When-
going to identify when things start to fall apart? If you
Yeah,
know that,
yeah.
that's a great
Yeah.
advantage as a trader.
Right. And at least be consistent to your, with your plan, right? So
Yeah,
when you think,
absolutely.
because we'll be wrong. When you're wrong, okay, that's fine. And readapt or reassess. And we go to the next one. Words of wisdom. Okay, there's a lot here. I'm not going to talk about all of them. So, because there's too much, but I like the one in red. And I got this from your podcast on Alpha Mind. And
Oh, interesting.
I love that. I think I listened to it at least 3 times. So there's some great nuggets. The one I like, which is very helpful, is visualize your trade going against you. Kind of a glass half empty approach. How does it feel? What action will you take? I'm a glass half full person, but when it comes to trading, I try to be as negative as possible. What does it feel? What could happen in the market if we get a big down day, like you say, maybe 40 points in the rut falls or 100 in the SPX? Feel that. What does it feel like? I mean, not just what does it look like, but I want you to, like, are you going to freak out or feel that? So
Well,
I love that advice. So thank
the
you.
challenge is most of us, we think about winning and we don't think that the trade can lose. So we overtrade, right? We put too big a size on because we're not fully aware that we may lose that trade. So we start to size up more than we probably should. Then the trade goes against us and we're shocked. And then we're shocked. So we can't get back in the market with any size because,
We're paralyzed.
now
Yeah.
you're scared, you're paralyzed, right? And you can't
Yeah,
get back in the market, and then you miss the opportunity that usually follows a loss. And you just run into this cycle where it's just really hard to make money. And by visualizing this loss, you can, helps you trade the appropriate size. If you lose, it helps you understand what you're going to do afterwards, how you're going to feel about it, and stuff like that. So it's just a lot of good things there.
That's good. Also try to learn too. So the
Mhm.
next time you're building that inventory. Yeah. So when you recognize that environment again. But yeah, so there's other good stuff in here. Great podcasts. So I wanted to share that with the group. Yeah. One takeaway 2020 is, I really started to trust myself in trading in a sense. If it weren't me and it were someone else, I could tell my wife, hey, if something happens to me, you can go to John. And so I
Right.
just really trust myself. It has nothing to do with the money. It's just, you see VIX going from, what was our low? Was it even 11 in January? I can't remember the low.
I think it may have come
Yeah.
down to 11. Yeah.
It was
low,
like to 85 in a month. That's a big, that's a,
It's not like a
range.
pandemic to bring a VIX to 85.
That's right. Nice healthy pandemic. Wow. Yeah, definitely, clean everything out. So yeah, that helped me out. Try to keep things very simple, which is actually good for commissions. I'm not over trading, but so that was my big takeaway for 2020. A lot of, I guess, more psychology.
Yeah, I mean, it's really a big thing to trust yourself. And trust yourself, not that you're going to win every single time, but trust yourself that you are going to get out of the market when you should, or adapt when you should, and you're trading a good size and stuff like that. You know, it brings you confidence.
Well, and here's an example. I was watching Monday. Today is Thursday, the 10th of December. I know we're recording this. So on Monday, you did your weekly update and you went over the M3. Well, the M3 last week, I think it was down $1,500 on a 10 lot, and then it popped up 1,600.
Right.
That's a $3,000 change. So my point is, be patient, right? These things work out, right? You just got to be patient. All of a sudden, the money came in. You know, it popped up the tent. Yeah, I just thought that was interesting.
And if you're freaked
right?
out because you're drawn down, right, $1,500, and you do something foolish, then you'll probably lose that trade instead of just kind of following your rules.
Right, following your rules, and then the market will have a tendency to come. Yeah, but that's I thought that was interesting. Yeah, trust yourself, trust these little toolboxes we have. In 2021, yeah, same thing. Trust. You got to follow the process. I try to look at the P&L number 2 here. If it's up or down. I mean, this is, I'm not like a Zen, keep smiling at it. I'm trying to just, okay, when it's up, don't celebrate too much. When it's down, don't kick yourself, right?
Yeah. Well, one of the things we talk about Ryan, right? And we had to do a brain hack for him. He might talk about that. I think you talked about it in some of maybe his past webinars he did with us, but he literally covers his profit and loss. He doesn't want to see it.
Like a black tape, just puts it on.
Yep.
Huh.
Until at which point it makes a difference, until it hits its loss number or whatever. Until then, he doesn't want to know what it is, right?
Wow.
It's just because it affects his trading too much.
Yeah. We are
so
human.
it's just a mind hack. I mean, my mind hack is when I put on a trade, I take the maximum loss mentally out of the account in my mind. And
so say that again. You take it out. I mean,
so if I have say I have $100,000 in an account and I put on a trade with a $5,000 exit loss trigger, that $5,000, I see the account as a $95,000 account, not a $100,000 account, until the trade is closed. And if I close the trade and I still have that $95,000, I've won.
Wow. Okay.
Because that is my plan. That was my process. That was what I did. Now I'll give myself a little bit of a buffer. It'll be like 93,000, but that's the point. Is I don't consider any of that money mine. As soon as it goes in the marketplace, that money at risk is not mine anymore. It's not mine until I get back, right? And it prevents me from, watching the profit and loss every day and all this other stuff. I just kind of trust what's going on.
That's a great hack. Thank you.
Yeah, that
like
works
that.
for me. So
I like
everybody has a little bit different, but
it's easier than putting black tape on the screen. Messes up. No, but that's I like that. I like that.
Well, there's a lot of things you can do, right? It depends on the person.
It's true. I mean, I haven't heard that version. I like yours. It's good. And also, speaking of Black Peer and Ryan, they had a presentation recently talking about the relationship between Theta and Vega. And this is more for low volatility. If you go back to 2017, throw in a bearish broken wing butterfly, excuse me.
Right.
I thought that was interesting. There was a lot of risk in some of these because of the Vega. So I never really looked at that, the Vega, so I'd love to hear your perspective, but that's
it's interesting because you take an M3 trade now, for example, has a $50,000 planned capital. These days, you're rarely getting more than $15,000 in the trade.
Right.
You go in a low implied volatility environment, you're fighting to keep that thing under 50 grand. So there's a difference, right? There's a difference in that way those two trades are going to react. And one of the things you can do is you can change the size of the wings, for example, and you can drop them down to make that trade essentially a smaller trade. And that's also going to affect your Theta Vega relationship, and you can do that. Now, how effective that is as far as results, well, that's up in the air, right? That's a question, but you can certainly do that, and it'll make the trade easier. Because one of the things that people don't understand is trading was actually more risky in February of this year and January of this year than it is now.
Right.
Than it was in April, for example.
Right.
It was much less risky in April than it was in January, and that's because of the low applied volatility environment. It's literally harder to make money in those environments.
Yeah. Yeah, well said. It's a,
Yeah.
that's one reason why it's like, might have to go back to the batting cage because this low vol, it's been a while, right? We haven't
Yeah.
traded in that environment. It feels a little awkward. We're used to these very cheap butterflies. And the other thing I was going to say is Super Bowl. I think you mentioned it earlier in this presentation. It's just such a great trade. And I like it to keep so a little bit systematic. So I'm very subjective. So I like that Super Bowl have a little systematic.
Yeah, it's not going to do well in a sideways or down market. So, I mean, if it's not volatile, right? So, but it's very good
Or it
in
could
a
be
sideways market
opportunistic,
that is very volatile, or an uptrending market that's even very volatile. So,
yeah. And then obviously the rock trade is a great trade. And I mean, it does well in any environment, but for my style, I like to include it in the low vol world. But yeah. So, and that's it. And this is the fam at Lake Louise this is last year, actually, last Christmas.
oh, that's cool.
Those are my girls. But
I'm going to be next to the pool near Christmas. So.
Yeah, you're gonna be in Florida. That's right. Hey, we're gonna be in Florida. Where do you go? Where are you?
We bought a place right near Disney, so it's like 3 miles from.
Of course.
Disney. So,
Oh my gosh! Yeah, that's great. That's great.
Should be fun. Yeah.
Well, you're doing it right. You're doing it right, John. And I mean, I want to say thank you for at least helping us out. I mean, helping the community, helping my family. I mean, this is great.
That's awesome. We're so grateful we were able to help and be a part in your journey with trading. That's awesome.
No, thanks, John. I appreciate it.
Thank you.
But the rest of the group, I wish we all could get together one day, but that'll happen.
Yeah, we'll have another group event. We'll have some fun. we got to get everything to open up, though. I'd like to do it without a mask on. So
that's right. We should have had our. Very true. We've been Zooming. Everybody's been Zooming. But no, thanks, John. I appreciate it.
Yeah, thanks for coming on. Thanks for sharing your experience with us, and I hope you have a great Christmas and a great year.
Thanks. Appreciate it, John. All right. Hey, take care, everybody.
Take care. Yep, bye-bye.
All right. All the best. Bye.
All right. I hope you enjoyed John. He's always great to do an interview with and great to talk to. Let's go to Chris. He will discuss his experience this year. Enjoy. Hi, Chris. Thanks for coming on with for recording for the holiday party this year. How are you?
Very well. Thanks so much, John. Haven't seen you for quite a while. I like your mustache.
Yeah, thank you. It's coming in. I don't know how long I'll keep it, but it's good for now.
2020, full of surprises.
2020 is full of surprises. It was definitely a lot of new things happening this year, and I think a lot of people had to do some adapting to their trading strategies to do well for the year. I mean, some of them did pretty well, but there was also a lot of stuff that kind of went bad this year. So,
yeah, for me, it was all the unexpected. I thought I had a pretty good plan going into the year, and boy, did that change. And not only trading, but everything else. And I got to say, I'm happy with the results, but it's not the way I expected to get there.
Well, I think that's an important part, is being adaptable. I think and this year just points that out, how critical having the ability to do some realizing, or we call it sensory acuity, right? What's happening to you, and then being able to adapt to it. I think that's an important part of trading. What do you think?
Well, had I followed my plan, I wouldn't have done that badly at all. I pretty much dropped the M3.4U and the V32 SPX, which were sort of staples for the last year and a half or so before that. And had I stuck with them, I would have done fine.
Yeah.
As proven by your own, trading income simulations.
Sure.
So, and I tend to, take a strong opinion on some stuff, which I shouldn't take opinions on. And we've talked about this before. And on sort of the mid to long-term decisions, my opinions are usually wrong, and I should just stay away from them. So I could have done probably better had I stuck with my plan, but other things kicked in which saved the boat. So I can't complain.
Yeah, as long as we make out well overall. We all go through the gyrations, so forth, of of our experience, and then
Yep.
if we're getting good results, that's good. So, what do you think your biggest lessons were this year as far as learning?
Well, on the I have I think I talked about it last year already. I have a weekly. I like the short-term stuff, so the weekly stuff.
Sure.
And so I have a broken wing butterfly on the SPX that I do weekly, and that did very well this year. I stepped out of it from like March until May.
Mhm.
Had I stuck with it during that period, it would have been on planned capital 100%, as it was maybe 50%. Because I lost that chunk of time, I'm pretty much break even. Of course, during the February-March drawdown, that took a huge hit. But had I stuck with it, I would have been fine. And so my conclusion out of the whole thing is I really shouldn't have these opinions on the market. I should stick with my plan, and my plan says put on the weekly, butterfly, broken wing butterfly, just put it on.
Right. So you're saying you got spooked out of the market because of the big down move, and you just decided to stay out for a while?
I expected a retest of the bottoms,
Mm-hmm.
and it kept me out of the market. And then, of course, during that run up, I didn't want to put on a bullish, broken wing butterfly after a 400-point Dow day, or a series of 400-point Dow days. But it kept on going up. So,
Well, you don't know, because it could have just as easily come back and retested it. But yeah, and I think, if we don't understand the marketplace, I don't think it's a terrible idea to be out of it.
Well, what saved me this year was really my stock portfolio. I was hedging it to the downside, and I called that right. So end of February, I already put on risk reversals on the stock portfolio. My stocks were basically the FANG stocks and Tesla.
Mm-hmm.
And then they came back with a vengeance, and I rode those all the way up. So I made money on my stock portfolio this year like crazy, and my income trading did okay, but didn't do as well as it would have had I stuck to the plan.
Yeah, I mean, these are, for the most part, market neutral strategies. And of course, we take on risk in trading. They got to be one direction or the other, or both directions. So a heavily directional bias market can be problematic for us.
Yeah. And it sure was directional, and it still is. And I don't know what to make of it. I've actually taken those stocks that have run up so much this year, and I've put on sort of synthetic butterflies on them. So I sell a combo on the downside and a debit put spread on the upside, and build a butterfly out of it. And I'm just locking in those gains. I don't want to take any losses on those, because I'm expecting a pullback at some point. It's got to be.
Yeah. Now, so you're still taking opinions in the marketplace then?
Yeah. Well, my opinion is I'm happy with what I made. I don't need to make any more on those stocks. I'm not going to give it back this time, because I've given it back a lot. I mean, on Tesla, on the FANG stocks. I mean, they've had roller coaster over the last couple of years.
So that's great, though, using option strategies along with your stocks to help protect your portfolio on the downside. Yep. And then now that you believe we're topped out. So, I mean, both of those, I think it's important that, you talk to yourself about your decisions are always bad, but they're not.
No, as I said, I'm happy with this year, just not at all what I expected. So
right, but it's not what I mean, I'd like to point out, though, that you're making decisions in the marketplace, and some of them are right and some of them are wrong. I think focusing in on the wrong decisions is, and saying that you're wrong all the time, I don't know that that's beneficial to you, because obviously it's benefiting you in some ways.
Well, for me, it's difficult to do an M3.4U or a V32 if I think we're high in the market. The weekly strategies, on the other hand, for me are much easier to go in again and again and again on a weekly basis, because sort of that market sense of we're going up, we're going down, it's kind of irrelevant in the, 5 days to expiration that I'm into things.
Right.
And so it's much more a probability call, and you're not adjusting. They're all no-touch strategies. So it's either good or bad, and you got a next one to go, and you got 52 of them to do a year, and there's plenty to look forward to. So
Yeah.
I don't dwell on something I've been in for 2 months and feel like I made a wrong decision somewhere that I should have done differently.
That's a good thing to know about your personality, right?
It fits me. It fits me. I know many people can't stand these weekly strategies. I've really come home to them, and it's where I feel best.
So yeah, nice quick feedback. Broken wing butterfly. I make it. I don't make it. Are you slightly bullish positioned with those?
Yeah.
Yeah.
Basically, I'm putting them on for about a $2 credit with a $25,000 downside risk, and they often come off in one day with $1,000. So I have a ladder of target profits starting at $1,000 and then going up $500 a day, and then I'm out after 5 days in the trade in any case.
Yeah, nice quick results, and you get it back and move on.
And a stop loss of $1,000. And that's the tough part. I can set a limit order on getting the target profit. Getting out with a loss is hairy because, the stop loss orders, they don't trade well on broken wing butterflies on the SPX. You have no idea what price you're going to get. So
right, you don't know what your prices are going to be. Plus, you got the gaps and stuff to deal with. So
right. But it works. So I kind of have to hang around and keep my alerts on all day intraday, but otherwise it's a no touch. And the only reason I have the alerts is for the stop loss.
Right. Interesting. No, that's awesome. That's awesome. So glad you kind of found your way. And the thing is, you learn all the stuff that we learn in the memberships and stuff. But the thing is, ultimately, it's good for people to go out and apply that knowledge to their personality and to develop their own trading style. I think that's awesome.
Absolutely. I mean, that's what you've done for me. You gave me this whole buffet of strategies. And I could kind of figure what I liked, what I didn't like, and came to the conclusion that I'd rather have a no touch on a weekly basis than have something that I'm adjusting every week or even more frequently over a longer period of time. It's just me.
Yeah, and that's fine. And I can certainly understand, you think you're in a battle for 60 days and then you end up taking a loss on it sometimes. And that can be a little bit discouraging. And the feedback is very slow for somebody who's requires faster feedback. Then the weeklies certainly are a good option for them. So.
Right. And I love the frequency, the fact that you've got these 50 trades a year.
Yeah.
So you don't have to dwell on your loser. I mean, it's just like it's history already after a day.
Yeah. Jump back in and do it. Yeah.
Clear the mind, start over. Yeah.
Right. You just wish you jumped back in earlier this year, right?
Right.
Yeah, we get that. I think a lot of people, you're not alone. I think a lot of people got spooked out of March, that March move. That was the biggest point move we've ever seen. And I got very aggressive and started buying stuff through that and did very well this year. This is the best year I think I've ever had in trading. Actually, I know it's the best year I've ever had by far. And I think it's just because of the ability to get aggressive when everybody else is afraid. And I think working on that for all of us is going to be beneficial.
Yeah, well done. Well done.
Yeah.
So you didn't think we were looking at a double dip, a retest of the lows, or you just...
I didn't care.
You didn't care. You just...
Right. I in other words, you're looking very shorter term. I look a lot longer term. And I just said, at the prices things are at now, it's a good value and it's time to buy. So just loading stuff up and bullish with the options positions. And it ended up being a really good year. So can't complain.
Excellent. Great. Great.
Yeah. So
well, I would think that most of the membership has done well.
I think so. I mean, for the feedback I've gotten, most people have done at least okay. Some people have done spectacular. And I haven't really heard of anybody, although there's probably people out there, I'm sure, that kind of got beat up. But If they did, it's probably because they fed into the fear, so to speak,
Mhm.
and they're just afraid to get bullish.
Yeah, well, and I'm still bearish. Look what we've been through, you know.
But you can be bearish and make money, so you're living proof, right?
Exactly. I'm happy. I'm a happy bearish guy. Yeah.
Nice, nice, awesome. So yeah, so I would say a success you achieved was making money in this crazy year, despite the fact you had to, you're kind of freaked out a little bit in the middle there.
Yeah, definitely. Definitely.
Nice, nice. That's awesome. So you have something you're planning to do next year to improve your trading?
I'm going to stick with my weekly broken wing butterfly, and I'm going to size it up. So I've got, calculations and back testing, which shows me how it performs. And I've also got a sizing strategy that I can apply to that, a compounding strategy that I haven't done yet. I've kept fixed size every week, and I'm going to start using that next year and size it up. That's where the real gains come in compounding. We've had this discussion before as well.
Sure.
I would increase size according to account. As the account size grows, I would increase size. As I have losses, I would decrease size. And
yeah, well, compounding is very powerful, as you know, and yeah, as long as you have a strategy that works for you, that's awesome.
Right. I'm not going to try and second guess it and upsize after a loss and downsize after a win. I've heard that strategy somewhere, but I'm not going to do it.
Here's the thing: you can do both strategies and do okay as long as you're consistent.
Right. Absolutely.
Right. It's randomly dumping size, randomly increasing size, based on your motions.
Yeah.
Right. That's going to beat you up.
I'm going to do it by onesies and twosies. I mean, it's going to move slowly.
Right. And I know I've seen your plan for increasing capital size. It's very incremental. It's not like you're taking it and you're putting on 3 times the size.
No.
Which is what most people do. They'll take on a couple wins. They'll go from trading $10 to $5,000, right?
No. It's I'm doing 10 contracts now, and according to my back test, it's going to take maybe about 5 to 10 weeks, and I'll add a contract.
Yeah.
But then it gets quite frequent. And then what do I do when I get up to like 500 contracts? So I'll worry about that when the time comes.
Let's see if you run into that problem. We can talk about that.
Right. So that's esoteric. Yeah. Okay.
Exactly. No, so let's not get ahead of ourselves, right?
Yeah.
All right. So what's one piece of advice you'd give a struggling trader?
It's always the same. I mean, for me, and struggling, I guess you can always look at some part of you that's struggling.
That's a
do
good
your
point.
Back tests, build your confidence, take your losses when you're supposed to take your losses. Those are the 3 critical things. Specifically on taking losses, if I look back on my trading history, and I started in 2006 with options, I would have at least double the performance, at least, had I taken my losses as I was supposed to. It's the big losses which really deteriorate.
When you're in it, it's so hard to take the loss. What do you do to take that loss?
I think it's my experience now. It's just saying it's just not worth it. And again, the weekly strategy helps so much. I'm going to take
because you experience a lot more losses, right, in a short period of time.
Yeah. There's no escaping them. I mean, you can't beat them. They come and you take the $1,000 loss, or you take a $5,000 loss. You take a $5,000 loss, you're screwed for the next couple of months.
Yeah.
You gotta take the $1,000 loss for the system to work. Otherwise, it doesn't. And of course, with gaps, you will have those horrible, like in March.
Right. We want to minimize those, though, right? I mean, you can do that. I mean, you get out when you have control. When you don't, you don't.
And and they will happen, and they're in the back test. They're everywhere. So.
You mean you didn't filter them out of your back test?
What's that?
You didn't filter them out of your back test?
No, not yet.
And pretend everything was going to be okay?
No. In the back test, I think the biggest loss was $12,000.
Right. But the thing is, I think you have to let that happen. You have to be aware as a trader that this is what trading is. I mean, it happens from time to time.
It is normal. Yes.
And you can lose and you can still make money, which is really cool.
Yep. You
Just
got to know what's coming later on, and you can only do that if you've done your back testing. If you haven't done the back testing, you get spooked and you think you can think the market and all that.
Right. I'm on this big thing now about having people back test realistically and not filtering out losses out of the past just to make the system palatable so you can have confidence in it, because that doesn't do you any good.
I remember when I did back testing and, maybe 10 years ago, and I never did that, but you're always stuck with these decisions, well, this could go either way, and those times it was like, oh, well, this one I would have decided that way, and it's to the positive.
Right. I would have done that.
Right. And now I've come to the conclusion, that's no good. Go the other way. It feels much better because you still come out ahead.
Right.
Even though you assume a worse situation than what was a likely case. Just take the worst situation, and if you still come out ahead, then you feel really great about it.
Well, even more than that is it gives you the resiliency to actually be able to trade through it. Because if you're always taking the right choice, you convince yourself that this bad thing's not going to happen. And then when it happens with real money, you're completely freaked out.
Right.
You're not
You're
prepared
not
for
making
it.
good choices at all. You're making really stupid choices at that point.
Right. And that brings people into this cycle of just bad decisions, and that's not good. So that's awesome advice. Awesome advice. All right, Chris. Well, any final words here?
What do I have? I'm just looking forward to getting back to normal. Seeing the
Me
kids.
too.
Yeah, it's been a long year, but I'm looking at getting back into the M3.4U. I just like that in terms of a midterm strategy as kind of a balance to the short-term stuff.
Yeah, had a good year this year. Other than if you had 2 months, right? The 2 monthly cycles you get whacked out of. But other than that, it's been a really good year. Yeah.
And I'm actually using those rules or similar to those rules on my hedged stock portfolio. So I have these simulated butterflies on my
Nice.
stocks, and I,
Use the
on
same
verticals on
basic
the
rule
upper
set.
wing.
Yeah, you can apply it to anything, right? So that's wonderful. Yeah.
Yeah, I just like the simplicity of the adjustments, and that keeps me with it.
Awesome.
Otherwise, all is good, and stick with you.
All right, sounds good, Chris. And have a great new year. And of course, as always, feel free to contact me during the year. We'd love to hear from you. I always love to hear from all the students. And trade well.
Okay, thanks so much, John. You take care. Greetings
Thanks.
to Sherry.
Okay, thanks. Bye, Chris.
Okay, bye-bye.
Well, welcome, Tano. How are you today?
Doing good. Thanks for having me, John.
All right. Well, thanks for doing this recording here for our special holiday party. And just a couple questions, and we'll see how you do. And of course, feel free to add anything that you'd like to add.
Okay.
But what were some of the biggest lessons that you've learned this year?
So I didn't expect the kind of year we've had coming into the year. Didn't expect to have the wide range, especially in the Russell, which is mainly what I trade.
I don't know that any of us did, right? We're sitting there going along happily. I think the market was actually low volatility, was kind of poised to like it wanted to go up and continue to go up. And next thing you know, everybody's in shock, right, with the reaction to this COVID thing.
Right. One big lesson that I've kind of known subconsciously over the years as I've learned it, but that really got used this year was just the fact that we trade volatility. That really kind of came to the surface this year in how prices moved for butterflies and what different adjustments, how they reacted to volatility. So it was a great year to learn that because it was all kind of compressed in 1 year rather than seeing it happen over several years.
Yeah, I think what you say is really insightful, because in the past we've had these variances in our T+0 lines, and we've had these variances with pricing and stuff, but they've been like from $10 to $13. They haven't been from like $2 to $13.
Right. Right.
Yeah.
And probably the second thing was, well, two other things that I think again came to the surface this year, which I always kind of knew, was watching your delta theta ratios, just having a range for delta for the entire portfolio, just kind of keeping things a little tighter. And then size made a big difference too. One of the things for me that happened personally this year was work actually got real busy. Even though we're in the restaurant business, it just, things lined up to where we are located is more of a residential area. So with more people being home and the college kids coming home, our business picked up. Summer was real busy. So it was harder. So I had to kind of trade around that.
Okay.
And so I had to make sure my positions were tighter. I was watching my delta theta ratios. So that was also a learning experience. I haven't had to do that in the past as much as I had to do it this year.
Well, we had some drastic changes, and I think it's appropriate to adapt when we have some very drastic changes in the marketplace. Now, I know you did a lot of like bearish butterfly type of stuff in the past. I don't know if you're still doing that, but that was, if by the guidelines at least, the trading strategy this year was very challenging. So
it was. So the year kind of broke out into three parts for me. Like January, February was one part, and I was trading the bearish butterfly, and I would have some long deltas to kind of hedge the upside. Almost like a bull trade. I'd sell put vertical spreads in the rut to kind of hedge the upside. So when we first started falling, it was great because just the way I was positioned, I was short deltas. I was able to take some stuff off. And then starting when volatility spiked, that transition period, which is always challenging, I just happened to be very small in my position. So that kind of worked out. And what I started doing was I didn't go by the guidelines. I would enter a butterfly, and they were $4 or $5. They were cheap.
right.
And so I didn't have that much risk in the trade. So I would just sit in that position. If he went lower, I would take it off for a profit and roll lower. I was just rolling to add the money. But it didn't matter where you rolled. The T+0 line was just so flat for a while there. It was just so, you just sat and waited. And so if the market went higher, I would stay 1/3 entered. I wasn't scaling up. And after when we had about probably 30 days to go, I would start just raising the right side. I would just I would kind of go more into like an M3.4U kind of configuration. And then I would add the next month on, which would be just a butterfly
again. Yeah.
So there was a lot of that going on along with work being busy. But then later in the year, when you did the update to the bearish butterfly, that was very affirming to me because there were certain things that I was doing intuitively that I wasn't sure how it would play out. And then when you did that update, it kind of affirmed some of those things that you talked about, I was already starting to do. So those things kind of came together this year, which was great because it's, there's no specific guidelines necessarily to trade with. There's no one, magic pill, but just learning how your structure reacts to different volatilities. That was the neat part that came together this year, kind of for me. And then, so January, February was one part, and then March through September was kind of where I was just, entering 1/3 and then just not scaling in. The last 3 months have been the most challenging with this run up in the rut. It's been hard to keep up with that. So, but that's just what it is, and then we've kind of lost volatility too along the way. So that opportunity is kind of dried up a little bit.
Yeah, well, first of all, I think what you said earlier was just very powerful, and the ability to, rather than just being stuck and fixed into following a set of rules and really not understanding what you're doing, I think that, unrealizing that this is happening, right? This is happening in the marketplace, and this is not going to be good for that particular strategy if I follow this particular rule set, because things have changed so much. And then you effectively adapted that. I think that's just fantastic.
Right. And while I was doing it, there's a sense of discomfort for someone like me because of the way my work is. I try to trade more by a certain set of mechanics. And I try to keep those constant. I know that's not the best way to do it, but it helps me to make adjustments at a certain time in the day, and to do certain adjustments at certain times, because I feel like if I keep that constant, then that's one variable I don't have to worry if I'm doing it right or wrong. But this year was challenging to do that. And so while I was being flexible, it was affirming to see your changes to the rock and to the bearish butterfly, and how you made those changes was really helpful. So
that's fantastic. Yeah, that's good. And it's the same thing. I do the same thing here, where I know we have our trading strategy rules, but I'm not blind to the fact that any set of trading guidelines or rules are going to be effective in certain conditions and certain ranges, and realize the ability to realize that this isn't something that's forever. It's just temporary. It's working in these ranges right now and so forth. And then when you see things go outside range, being able to quickly adapt. I mean, we came out with the update later in the year, but you could see I was adapting very early in the year, right? In the membership, you could see right away, we start saying, well, this isn't working for us anymore, given what's going on in the marketplace, and we just start adapting with it.
And I had a hard time keeping up with some of the webinars this year, with work being what it is. So that was tough. I was going back, I was, a few months behind at times to go back and watch something, which was a good thing to do in itself. But, being flexible, like you said, is key, but it goes hand in hand with watching your size, because someone's trading big, sometimes just that drawdown can mentally mess you up to where you stop learning, because you just lost so much money that now you just want to make that money back. So that was a great thing for me, staying small. So in terms of P&L, I was having a good year till probably end of September, and then last couple of months I've given some of it back. So it's not been that great of a year in terms of P&L, but it's been great in terms of learning. And it's one thing to say we need to adapt, but then it's another thing to really have to adapt very quickly. And that's what this year did. So.
Yeah, and it's been getting increasingly, or I would say the market's been getting increasingly variable over the last several years. 2016 was a year that the market really did some stuff it's never done or hasn't done in a very long time. Then 2018, we had two market crashes in 2018. 2019, we didn't have the big price moves, but we had some really unfavorable implied volatility situations in 2019. And then here, this is the grand finale, we hope, right?
Right. And the lesson there is just, we don't know what 21 is going to be and what 22 is going to be, and understanding your structure that you're trading. One thing I want to kind of test a little bit going forward and do a little differently next year is kind of a combination of the bearish butterfly and I would say like an M3.4U structure. In other words, kind of entering as a broke winning butterfly, but just entering 1/3 my size, and then using the scaling in concept of the bearish butterfly. So the market goes higher, I would add another broke winning butterfly, and then another one go 3/3 scaled in. and then kind of almost roll those around.
hmm
I want to test something like that going forward, and see how that would have done in the last 3 years, especially that kind of a structure. So a little
Yeah.
more longer deltas than what a bearish butterfly would be.
Right. So that's that's fantastic. So what you're doing is you're just taking concepts from different types of strategies and you're adding them together, which is ultimately what I love people to do, is do that. That's great. You know.
Yeah.
Again, each of the strategies we have is designed to highlight a different type of adjustment strategy or a different type of entry strategy or different type of exit strategy. Then you can take what you like about each strategy and you kind of push them together. That's great. Yeah. Super.
So, yeah.
So what successes did you achieve? Do you have a certain success that stands out?
It kind of ties into what we talked about in a sense, managing my size, which helped me manage my delta theta ratios, my delta range. So when we had these, I mean, I don't even know how many days we had where it seemed like a lot of the moves were overnight. You know, you just opened down lock limit, or you just opened up lock limit, and you just, you know, you're sitting there and couldn't, you know, I trade the futures a little bit overnight. So just ES futures is what options on that is what I would use.
Mm-hmm.
But I think the biggest takeaway for me was watching size, because in 2018, when we first crashed, I was a lot bigger, and I didn't know what size was till the crash happened. And, you know, I gave up several months of gains. But since then, the 2018 crash, the end of the year crash, and then what we went through this year, I handled it much better, and size had a big role played a big role in that. So I would say staying small and not getting kind of sucked into success and then just sizing up because something has worked, I would say was successful for me.
Yeah, I think that's a great insight, and you know, we see that all the time. People they kind of forget that they can lose because these strategies you can win for such a long time, you kind of forget that you can lose, and you end up getting oversized and overconfident. Next thing you know, you know.
And in individual equities, which I don't trade a whole lot, but I'll trade some strangles in there. But I have friends who trade and they don't realize how big they are just trading you know, they're just selling strangles like, you know, hey, if one of them is paying 200, then 10 of them would pay 2,000. And then
yeah, right.
And then with the move we had, brokerage firms were raising margin requirements on equities and stuff. So they got hurt with, you know, you don't realize how big you really are. So.
Yeah, that's the other game, playing into portfolio margining. People don't understand that they'll change their margin, and they have the right to change the margin limits at any time, and they'll just pull your trade out. Yeah, for sure. So, all right. So we'll just close this up for you. But one piece of advice you'd give a struggling trader.
Not to focus so much on just your P&L, even though that's at the end of the day, that's why we trade. I get that, but to really focus on learning your structure and the pros and cons of, you know, even if you're just selling a vertical spread every month, selling a put spread, you know, understanding why that works, when it'll work, when it won't work, and understanding the role of volatility in your trade structure. That's a big thing. That's a big, it's better to learn that lesson early, and of course staying small, but it's better to learn those early than down the road.
Right. Yeah, and always keep in mind, right, People believe that this type of trading is trading time passage, but it's actually trading volatility.
Right.
Yeah.
Right.
Yeah. And you can
And,
see
and
that.
watching losses take, having, in certain strategies, you can have a 1-to-1 win to loss kind of ratio, or, make one, lose one. Then there's certain strategies, like I'm teaching my kids to trade, and they're, 10, 12, and 14. But they're just selling put spreads in ETFs, SPY, IWM. There you're gonna make very little and you can lose a lot. So managing that risk, having a certain multiple of the credit you collected as your max loss, or something like that, was at least this year was, and probably in 2008 also was super critical, because in a strategy like that you can give up 2 or 3 years in a matter of a few weeks. So
yeah, you can't let those get out of control.
Right.
Yeah, absolutely.
So yeah.
All right. No, that's super. So thank you very much for sharing your insights for this year.
Thank you. Thanks for having me, and hope you'll have a Merry Christmas.
Yes, Merry Christmas and have a great New Year, and make sure you stay in touch with us all year long, because
I absolutely will.
We're here to help, and of sharing the information with you. So thanks, Tano.
I will, and thank you. Yeah, thanks for everything you do. Thanks, John.
Thank you. Yeah. Bye-bye.
Bye-bye.
Well, and here we have our very own Stephen Hammett. Hello, Stephen.
Hey, John. How are you?
Great. Happy holidays.
Happy holidays to you as well.
Awesome. So it's good to have you back here, and let's just talk about what were some of the biggest lessons that you learned this year, and how did it go for you?
Wow, what a year, right? This year was, and it seems like every year we have this conversation where we learn so much, and we take so much from it. But this year was really the market throwing everything it could at you in so many different ways. We started the year out with the humdrum low volatility grinding up markets, and you kind of find yourself getting a little complacent with your trading and what the market's doing, and just expect the same thing over and over again. So this year really forced me, as I assumed other traders, to really kind of step back and think about their trading in a really different way. And the market has a way of doing that, right? Forcing you to do it. And for me, there was a number of things that were my biggest lessons. And I'd say, the two biggest ones was really my TA. I've always had good confidence in my TA, but it's always been more from a higher level on a weekly and a daily basis. And I can't really say that it ever really came into play with the trade plan, because the trades I was doing a little more, or they were a lot more higher DTE, more days in the trade. And I really shifted my trading to much shorter. Actually, it's 9-day trades, 16-day trades, and that kind of time frame. And so that forced me to really dial in my TA skills, not only on a daily basis, but down to an hourly basis. And what it also made me do was simplify my TA. Get rid of, the stories you like to tell yourself. Well, here's support and resistance, but what if it does this, and what if it does that? Just what are the levels, and you go with it. So in a sense, when I narrowed down my time frame, it also forced me to simplify my TA, not complicate it, which I think we tend to do as traders. So that was number one. And number two was this, since I'm trading much shorter DTE, and obviously the reason behind that is generally speaking, butterflies and are just much cheaper, and there's a lot more opportunity with the shorter dated stuff, which I found it right now, and it will certainly change. But for 2020, but part of that trade-off was you had to trade into expiration. And before I was trading the rock, and I don't know, maybe a little less than half the time you would take the trade in expiration, and it was certainly a white knuckle experience, or so it seemed. So, but with this trade, I was always in expiration. So from a mental standpoint, I really got used to that. There's not any angst. I felt I developed that skill, that ability, and that confidence to deal with the trade in expiration, because, you know, I put the trade on, say, you know, Tuesday, Wednesday of the week before expiration. Well, that, you know, Monday, you're only in the trade 3 days, trading days wise, and you're in expiration week. And that no longer was a mental challenge. So that was a big leap for me to feel very comfortable that I could deal with the trade. Now, did I get blown out to the upside and the downside sometimes? Sure. Did I not necessarily have the plan that I wanted in place when that happened? Sure. But it is now. You know, that's part of the learning. So that was huge, to be able to feel comfortable taking things into expiration. And along with that, the other big learning was, for me, I needed, just trading overall with the options, I needed more at bats, more trade reps. You know, so some traders may be comfortable with, you know, taking 1 trade a month. That's 12 a year, and maybe it overlaps, so it's 12 trades a year. Or, you know, what, even if you're kind of doing an M21 style, maybe you have a few more trades a year, but generally you're not going to have a whole lot. But for this, and in this environment, obviously it lends itself to that ability. And that was really nice, because no matter, it really helped to take the focus off of the outcome. Because let's say you took a loss, maybe it was a 2 times max loss. You're like, that's fine. Tomorrow I'm entering another trade, and by next week I'll have, this one will be under my belt too. So you could, it was comforting in a sense to know you were just right back in the game, and you didn't have to sit for a month with this loss, or working through a drawdown, which you have to have that fortitude to do anyway. And when the markets go back to, you know, let's call it a 2017 environment, or 2013, where it's just, you know, 9 VIX and slow, you know, you're not going to be doing these probably shorter term stuff, although you could argue you could do 10-day rocks. I mean, so, you know, it is possible to do, but just this idea of having more at bats, more trade opportunities through the year was huge for me, and it's something I find very attractive. And if I can continue that in different environments, that would be great. But I certainly will adapt to whatever I have to. But those are the biggest takeaways I had, or biggest learnings for this year.
Yeah, those are great insights, and I think that's why it's important to understand. You know, we have our longer term strategies when we do the programs, and we always bring them into expiration on options trading for income guidelines, unless we hit our profit targets. I think there's good learnings and good practice in that, and a good reason why people, you know, maybe should do that rather than try to avoid it all the time.
Yeah, and even so, that's a good point. Let's say that your trade plan says, you know, I'm going to be out at 10 DTE just because I don't want to deal with the gamma, or, you know, the challenges that come with that. But paper trade the rest of that trade. Let's say you exit it at 21 days or 10 days. Go ahead and paper trade that trade, and at least get some kind of experience. And even you could even do it live, right? Paper trade the rest of the trade, the balance of the trade live, and get that experience so that you have that confidence. But, you know, for me, it was definitely a little bit of getting thrown into the fire, just kind of forced myself to do it. And it was nerve-wracking at first. You're like, oh man, this is expiration week. This thing could gap 70 points either way. And it did.
Yeah, and the market was moving like bigger than it ever moved. Yeah, it did.
But it also really drives home the point that trade-offs, right? With that high gamma and with that high theta, and with that risk of a giant move against, came fantastic rewards. You know,
yeah,
there were a lot of times I was
if you just hit a 2-day period where you didn't get much market movement, you're just boom.
There were some days. Yeah, I would break even in the morning and hit profit target at the end of the day.
Right.
I mean, it just was that fast.
That's the power.
The power of it. So recognizing those trade-offs, and, you know, being responsible, understanding that if you get an ATR move, or if you're at support or at resistance, you're about to break out, you probably want to do something with the trade beforehand. So, you know, those are key things. And so that is really, you know, I've traded all your strategies, obviously, and so it's all the way from the 77 DTE X4 series, which you got all kinds of great aspects to it, down to what I'm doing now, which is taking things into expiration. And so, if you put that on a time continuum, from an expiration all the way to 17 DTE, it's kind of like I feel pretty confident I could say I've covered the wheel of everything that I could trade. So no matter what the market brings down the road, I should be able to handle that. At least I have the confidence. And if I don't, and if it is something a little different, which the market's always going to throw some curveballs at us, I can figure it out. Because that was another big component of this year. I had to kind of figure out what I wanted to do, or how to take advantage of cheaper butterflies, higher implied volatility. Does that mean I trade the same thing and just ride that, or can I? Is there more opportunity I could take advantage of, which is what I found. And so, really kind of figuring it out and taking your lumps in that process was really built confidence. Not being spooked out of it and saying, man, I got smoked on that trade. I don't want to do these expiration trades.
Great thing that you talk about. How do you gain confidence? People say that I'm not confident. How do you gain confidence? Well, you go in there and you do it. That's how you gain confidence.
Yeah, right? and just and stand your ground. And it's really easy to say, well, I'm 70% profit target and I could take it now. Should I? Because every single day is huge in these trades because of the gamma. And you gotta be able to really stand there, because as you have always said in the past, you're going to take these large losses, so you need some outside wins to offset those. You can't continually take profits underneath your profit target just because I got a nice little winner. Let's say your profit target's 5,000 and you're at 3,000. You're like, I just want to take that. Well, what happens when you take the $10,000 loss or the $8,000 loss? You're going to need those $5,000, $6,000 winners to offset that.
Absolutely. So what are you going to do next year to improve your trading? You have a plan?
Oh, wow. Next year.
I'd imagine you got quite an improvement this year.
Yeah, definitely. Yeah. And just to build on kind of what we were saying, I expect things to change. I mean, I think we always have to have that expectation with the market is either going to revert back to some quote unquote normal state, something that maybe we have seen or haven't seen. So really preparing for change.
Right. Rather than the common approach, right, which is find a set of rules and hope the market doesn't change in the future.
Well said. And to kind of stitch this back together in my earlier comments, that's kind of probably where I was at in January and February before the COVID crash, and kind of unknowingly, right? You get complacent. You're like, well, I was trading the rock in a very traditional manner. Or, well, I mean, I had some variations to it, but more or less traditionally. And you kind of get complacent. You get lulled to sleep with it. It's working. It's great. And you're not really thinking about, well, what if the market does this, or what if we start getting rising market, or we have a crash, or
what if the market moves more than it's ever moved before?
Yeah, right. In both ways, right? And what if you could buy 30-day butterflies for $3, which I did, by the way.
Which I couldn't. I mean, if you told me that like a year ago, you're going to be buying butterflies next year for $3, I'd be like, no way.
You're like, go put the straitjacket on. You're crazy. So, but it did. So, and right now I'm actually preparing for some kind of reversion back to what the market was doing and what that looks like. Can I continue to do, the high number at bats, so to speak, high reps, more trades, this is what I'm trying to say. Or am I going to have to go back to, one trade a month? I don't know. I'm investigating that, and I'm setting parameters for that based on different criteria. Butterfly price. If butterfly prices get back to $20, then I'm probably not going to be putting on 10-day trades. Or if I'm going to have to, putting certain restrictions on that. So I'm looking.
Or maybe have some different kind of configuration or something.
Yeah, or different configuration, exactly. So while I'm continuing to improve on what I'm doing now, I'm also trying to look ahead to say, if the market changes, what do I think that's going to look like? And then how will my trading change and adapt to that?
Nice.
So that's definitely what is on I'm actually working on that right now to say
Right.
what am I going
Thinking
to
of
do.
adaptation, right? And that gives you a sense of confidence in itself, knowing that you can adapt.
And yeah, exactly. And I'll tell you what, going into 2020, we were a year ago right now, it was more about, I'm trading the rock. I want to get better at that and really refine that and explore how I can make that better, which is great. But I wasn't thinking in terms of, a two-pronged approach. Is you always need to be thinking about how I can improve what I'm doing now, but also what if things change? What am I going to do? And so that's
right. Well, I remember years ago we were at a seminar and I told you whatever you're doing right now is going to fail.
yeah. People didn't like that. I don't think I liked it.
Right?
Yeah,
People
I don't
got
think
upset
I
at
liked
me.
it. Yeah.
But this is why, right? Things are going to change. There are going to be periods of time.
And I think your comment earlier was really hit the nail on the head. Is we keep wanting to, it's human nature to want to find something that works and just stick with it and then hope and pray the market doesn't change. And it's like, come on, guys, and gals, that's just, if we've learned anything this year, and really we've learned it for the last 3 years, right? 2018, when we had massive transition. 2019 had lots of transition. This one has been, we had a crash, and then, I don't know, this run up is unprecedented. I think some of the indexes, the RUD and the NDX are up are they up 100%, over 100%?
I think the Russell's up over 100. Yeah, I think so. I don't remember where I bought IWM at, but it was.
Yeah, I think you got it down by the lows. But here, let's put that in context real quick. Traditionally, if the market, however you define that, the SPY, the NASDAQ, any market index, if you have a 10% year, that's a good year.
Yeah.
We have been up 100% in those indexes since just March. That's not even a year. That is unbelievable.
That's insane. Yeah. If you got in there at the right time. Yep.
Yeah. On a number of levels, right? You could say, well, what does that exactly mean? Are we overbought? Yeah, sure. But the way I'm really looking at it is to say, with this incredible move up. Now, I will say during the COVID crash, I definitely struggled. I did not find anything trades that worked. It was
it was like 3 weeks though,
It was, yeah. Right? Was it really even a crash? A 4-week,
yeah,
pretty good dip? I don't know.
Those really
it wasn't
big
a bear market.
It's like those really, really big intraday moves you get when you're day trading,
Yeah, like it's big liquidation break, and then all of a sudden it goes back up. But what I was going to say was, with all those huge moves, keep in mind, I was trading a 9-day trade.
Yeah.
Like this move in November, just to give people an example of it can be done. The new move in the Russell in November, I think, is a record, isn't it? Or at least in that time frame.
Yeah, it's insane in the time frame.
It's definitely up there in the top 2 or 3 cycle moves, and so that's 4 or 5 trades for me. Have, let's see, 3 profit targets, 1 scratch, and 1 half profit target with that movement.
Right, and that's nice.
So it can be done. You would say, oh, wow. And then things move, I don't know, how much does it move? 200 points, 300 points. I mean, I had some cycles where in the 9 days it moved 100 points and still was able to make money. So it can be done, and it's not all that difficult, but you definitely have to put the work in and think about it. So back to what your earlier question, what I'm gonna do for 2021 is how can I, how am I going to adapt to the market as it continually changes and probably reverts back to what it was before, a little lower volatility, probably a lower ATR. Can I continue to do some short-term trading? Because again, I'm cognizant of not getting caught in that. That may not be possible. I'm not going to force myself to do, hey, I really like having lots of reps, 20, 25, 30 trades a year. So I'm just going to do that no matter what. And no, I'm not taking that approach. I'm trying to see, is there something I can do that meets that criteria, but still in a responsible manner and meets my objectives? I feel like right now that can be done.
Or there might be more opportunity elsewhere. I mean, if there's easier money to be made,
there could be. Yeah. I'm not going to, I would say in the past, I might try to force the circle in the square. It's like, well, I really like this XYZ component of my trading, so that has to work, and I'm not taking that approach.
Okay. Nice. Now, what's one piece of advice that you would give a struggling trader?
One piece of advice, I'll have to give you more, but I'll definitely give you
Okay.
the number one. The number one.
Number 1, 2, and 3.
Yeah, is develop a learning plan for everything. And I'll have to credit our great friend and great trader, Cindy Sarver, for this concept. And I think she presented, this was one of the first successful trader interviews you ever did.
Mhm.
Develop a learning plan, which is to say, write down a step-by-step roadmap for what you're going to learn and how you're going to learn it and how you're going to digest that material. So let's say you've just got one of John's strategies. That doesn't mean just pop open and start watching all the videos. It's, watch the videos. Maybe you're taking notes as you through your first view. Maybe you're not. Maybe it's watch all the videos just in one sitting. Then you're going to watch it again and take detailed notes. Then you're going to do back testing. Then you're going to do what if back testing. See how I've outlined some kind of a roadmap of how I'm going to learn. Let's say it's the M3-4U. How I'm going to learn this material. It's not. I've said this in the past. It's not watch video live trade. That's not a process. And hey, guilty as charged. There was a time when I did that, right? You say, I'll watch the videos, I'll watch John do the back testing, and boom, I'm live. 10 lot is on. That's not how we approach it. So a struggling trader, develop a learning plan like I talked about. Have it written down. Whether it's in OneNote or any of the other journaling softwares, or it's in a spiral notebook. Just write something down. And with that, it's going to have patience and recognize you're going to have some setbacks, and yet you learn the most growth and the most learning is going to come from setbacks.
If you take them properly.
Yes, thank you. If you take them properly and understand that is how we learn. The other piece of advice I would give a struggling trader is get a coach. Do some one-on-one coaching. And shameless plug, the coaching can come in different forms, right? It can be, I'm stuck on this one area. I'd like to just do one session. Let's get together, whether it's John or me, and let's hammer out that issue. Or it can be a series of sessions where we put together a learning plan, where we put together a list of objectives, where we do assign homework and we come back and review that and really help you digest that material. So if you're struggling, if you really want to ramp up that learning curve and get through the potholes, because I recommend getting a coach, but it comes down to this: you simply just don't know what you don't know.
Yeah.
And every time you come on and do the Trading with the Pro sessions, I'm learning every single time. And it always comes down to, it's not so much what I don't know anymore, because I think I've just been around and seen enough, but it's more of, that thought didn't trigger. Now I see what's triggering that thought. And so that's what a coach can help you do, is see those things around the corner, help you identify blind spots, and help you avoid those decision traps. Because those decision traps, which comes with the mental game, we put up these blinders unknowingly, right? We put up these sort of psychological barriers, like, well, the trade's going to work just because my back testing was successful, or maybe it's as simple as that. But you talk yourself in. You've said this before. You see things that you want to see. Like if you're going to buy a white Toyota truck, well, guess what? When you're driving down the road for the next 2 weeks, everything you see is a white Toyota truck. You're going to notice all the white trucks. You're going to notice the things that your mind is gravitating towards. And so that might be,
I bought a bright red truck, and I thought
bright red wood, yeah.
and I thought, I don't think I've ever seen bright red trucks like this around.
Right, I'm going to buy something nobody has.
My neighbor has one.
Yeah, then you start noticing it, and you could talk yourself that into a trade. You start to see, things that only are positive. So,
yeah. All right, awesome. That's a great piece of advice and a great presentation. Thank you, Stephen. I appreciate it.
Thank you, John. Yeah, it's been a great year, a lot of learning. And another thing I would try to suggest, and I know you said just one piece of advice, but getting a group of people or one other person as a little team or a trading partner, I think is really helpful. Really helpful. And you can find those people in our community through the forums or through Skype, and try to team up with some people who probably trade similar to you. And I think you really can advance yourself a lot quicker when you're working with somebody on trade ideas. And sometimes you can split up work, whether it's back testing or they can be an accountability partner. And then probably above all else, it's idea generation. You get on Skype together and say, hey, do you think about this? Or, hey, what are you doing here? Or what do you think about this adjustment? And I think that's great to have that kind of live day-to-day.
He's about off. Yeah, trading can be lonely. It's good to have a
Yes.
little bit of support there.
Absolutely. Agreed.
Yeah. Absolutely. All right. Well, thank you, Stephen. We appreciate it. And Happy New Year.
Thank you, John. Thanks for having me, and Happy New Year. And best of luck to everybody.
Yeah, trade well, everyone. All right. And that was Stephen, our last trader for the day, our last successful trader for the day. Also like to note that I had my microphone on mute, so I did not introduce the last three traders. So one of them was Chris, obviously, then Tano, and then that was our very own Stephen. And if you'd like to see an hour-long interview with any of these traders, as well as the other successful traders interviews that I've had in the past, and you're a member, you can just come into your membership site. You can go, let's say you're a Go member, you can come in here and just scroll down to Successful Options Trader of the Month, and you can see their interviews from the time we did them. Most of them are at least an hour long, lots of other great and valuable information. All right, and then as far as this presentation, I hope everybody got a ton of great information out of this. I'm just so excited to be able to share this with you, and I'm so excited to have all these traders come on and give us these valuable insights. And I appreciate you being here. So I hope everybody had a great Christmas. If you celebrate Christmas, or at the very least, a very happy holiday. And I wish everybody a happy new year and trade well going into 2021. There's a lot of fantastic opportunity up there. You just have to take advantage of it. And I encourage you to go ahead and do that. So thank you for joining us, and I look forward to serving you in 2021.